transformation present for businesses in India is expected to be in a trillions of dollars over the next 3 decades. Let me first expand on the energy transition space. This will fundamentally change the global energy landscape forever. The global transition market was valued at approximately $3 trillion in 2023 and is expected to grow nearly $6 trillion by 2030 and thereafter double every 10 years till 2050. As many of you know, in the case of India, our country aims to install 500 gigawatts of renewable energy capacity by 2030. This ambitious target will require annual investment of over $150 billion. The transition to green energy in India is expected to generate millions of new jobs in a sector such as solar and wind, energy storage, hydrogen and its derivatives, EV charging stations, as well as grid infrastructure development. The energy businesses that help to enable this transition will also create opportunity to monetize carbon credits. In fact, the Task Force on Scaling Voluntary Carbon Markets estimates that the demand for carbon credits could grow at over 30% and exceed $3 trillion by 2030. Therefore, I would go as far as to say that in the days ahead, the availability of the green electron will be the primary driver of our nation's economic progress. And in my opinion, the market size of the green electron as of now has no limits. Now let me talk about the digital infrastructure space and the emerging opportunity here. As all of us increasingly rely on our digital platforms for almost everything we do, it is leading to an explosive growth in our data generations. Data is indeed the new oil, and this has meant that we have now arrived at a world where the AI revolution sits at the core of every digital initiative. And at the heart of all these actions is the data centers, the critical infrastructure needed to power all forms of computational needs, especially AI workloads for machine learning algorithms, natural language processing, computer vision, and deep learnings. All of this is dependent on the ability to process data at unprecedented speed and scale, which are the precise capabilities that data centers provide. However, this will need a massive amounts of energy, making the data center business the largest energy consuming industries in the world. This makes the energy transitions even more complex and is raising the electricity prices, thereby adding to the already high prices because of the combined impact of a climate change and a demand growth. The fact is that the infrastructure required for energy transitions and the infrastructure required for our digital transformations are now inseparable as the technology sector becomes the largest consumer of the precious green electrons. My dear friends, we are well aware that there is no greater multiplier for GDP growth than that delivered by infrastructure investment. It is the foundation that allows efficient and frictionless flow. The flow of goods, electrons, molecules, data and people. And all of these flows are either core business driver or enable adjacent business for the Adani Group. And over the past 30 years, we have leveraged these drivers to become the world's second largest solar power company, India's largest airport operator with 25% passenger traffic and a 40% of air cargo, India's largest ports and logistic company with a 30% of national market share, India's largest integrated energy player spanning across generation, transmission and distribution, LNG and LPG terminals, and city gas and pipe gas distributions. India's second largest cement manufacturer, and several other new sectors, including metals, petrochemicals, aerospace and defense, super apps, and industrial clouds. However, while our past stands as a monument to our resilience and success, the emerging future opportunities are even more exciting. And nothing holds more potential than the two I have outlined, the energy transition space and the digital infrastructure space. These are trillion-dollar opportunities to capitalize on and will transform India both at a local and at a global space. This is why the Adani Group is making a massive investment in both these areas. The next decade will see us invest more than $100 billion in the energy transition space and further expand our integrated renewable energy value chain that today already spans the manufacturing of every major components required for green energy generations. We are confident that we will produce the world's least expensive green electron that will become the feedstock for several sectors that must meet the sustainability mandate. And to make this happen, we are already building the world's largest single-site renewable energy park at Khavda in the district of Kutch. Just this single location will generate 30 gigawatt of power, thereby taking to our total renewable energy capacity to 50 gigawatt by 2030. And when it comes to our digital footprint, this is already in the works and will span industrial clouds across each of our businesses that we will productize and then make it to market. Operational, technology, cybersecurity offerings, given our expertise in managing a vast variety of critical infrastructure operations. Super apps to leverage our B2C business across our wide variety of consumer-facing businesses. Artificial Intelligence Lab to capitalize on India's fast emerging expertise to provide AI services to the world. And data centers that will form the backbone of the energy-intensive digital revolutions. In fact, it is anticipated that by year 2030, the world will need 100 to 150 gigawatt of additional green energy just for the AI data centers. We already have India's largest order book of data centers and are now in discussion for additional gigawatt scale green AI data centers, which we are uniquely positioned to deliver. My dear friends, as I start wrapping up, allow me to summarize with some bold thoughts. Our democracy is 76 years old. It took us 58 years to get our first $1 trillion of GDP, 12 years to get the next trillion, and just 5 years for the third $1 trillion. Given the pace at which India is growing and the way the government has been executing social and economic reforms, I anticipate that within the next decade, India will start adding $1 trillion to its GDP every 12 to 18 months. This will put us well on track to be a $30 trillion economy by 2050. At this time, I expect the stock market capitalizations to have exceeded $40 trillion. What this effectively means is that over the next 26 years, India will potentially add $36 trillion to its stock market capitalizations. No other nation is remotely close to such a scale of possibility. So, my dear friends, let me conclude by painting a picture for all of us. Imagine for a moment standing at the edge of a vast ocean, our dreams on the far shore across the waters. The waters are turbulent at times, yet here we are, ready to build the bridge to cross it. Our hopes, our optimisms, our beliefs, and our spirits align to fulfill our aspiration as we work together to bring India back to its full glory. My dear friends, this is why I say there has never been a better time to be Indian. Jai Hind. Thank you.
And I'm Nupur Talwar Suri. The 53rd GST Council meeting has just concluded, and several crucial issues like streamlining the GST framework, enhancing compliance, and resolving industry concerns are likely to have been discussed. As per reports, one of the primary topics, of course, was rate rationalization, potentially involving reductions in GST rates for specific goods and services. Now, this move is anticipated to boost consumption and provide relief to businesses. Let's in fact go across to Janani, who has been speaking to finance ministers of different states. To remember that there was a meeting in the morning session with the state finance ministers of Nirmala Sitharaman to discuss their pre-budget demands. Janani, hi. Janani, tell us what you're hearing from the various finance ministers.
Hi, Nipur. So as we just gotten to know that the 53rd GST Council meeting has come to an end, and we spoke to we spoke to Andhra Pradesh's Finance Minister P. Keshav, who indicated that the next GST Council meeting, in fact, is expected to take place post the budget. Interestingly, the exemption on fertilizer GST, which was much awaited by the industry, has now been referred to the GOM on rate rationalization. Remember, this is the GOM that was recently reconstituted. And on that note, we will have to wait and see if, in fact, how the committee decides. But other than that, also a lot of decisions regarding ease of doing businesses was also taken up, is what we're getting to hear at the moment. Back to you.
All right. What we also understand is that the Kerala Finance Minister has urged for a special package of 24,000 crore rupees over next 2 years to tide over liquidity stress. That, of course, is what we are hearing from Kerala. But apart from that, there is also a demand, Janani, that has been made by Andhra Pradesh for a package for setting up Amravati as the capital. Tell us more. All right, I don't think we've got Janani. We're going to try and get her back in just a bit. But this is what we are hearing from Kerala. That's on your screens right now. So the Kerala Finance Minister asking for a package of about 24,000 crore rupees over 2 years to tide over liquidity. Now, they've also urged a special capital investment of 5,000 crore rupees for the state of Virigam port development, requesting another 5,000 crore for financial infrastructure projects such as the Calicut-Wayanad Tunnel Road. Also, of course, asking for earlier clearance of a semi-high-speed railway line. Now, just do remember that these are all just wish lists that are coming in from various states at this point in time. Earlier on, Janani, our correspondent who's on the ground, also spoke to the Andhra Pradesh Finance Minister, and he seemed to suggest that one of the things that they would like is essentially a special package for making sure that Amravati has all the help it needs to become the capital of Andhra Pradesh. Now, ahead of the GST Council meeting, of course, here's a look also at what India Inc. is expecting. Just to tell our viewers, we're also in standby for the Finance Minister to be speaking and briefing the media very shortly. We'll cut across to that when she starts addressing the media. But just let's listen into what India Inc. is asking in terms of what it would like from the union budget.
So my own sense is that this is the first GST Council meeting after this historic election, where the BJP has come to power for the third time, but of course with a coalition partner in TDP and others. So I think the important thing would be to set the stage for the next 3 years, 5 years for reforms. My expectation to start with would be that, before the elections itself, there were certain agenda items to be taken up. There was a lot of talk about rationalization of rates, but I still believe that the Fitment Committee for Rate is yet to provide all the information back to the GST Council. I think the budget is going to be coming up next month. I think the focus initially, at least in this GST Council meeting, would be to make certain key amendments that need to be made in the GST Act for the purpose of being able to operationalize certain things. For example, if they want to provide certain waivers for retrospective issues that are there for the past period, for example, online gaming, those will require certain powers to be provided to the executive to issue these waiver notifications. So I think one of the big agenda items there is an expectation is the GST Council to consider and put in place. And this is something which is affecting not only, say, the online gaming, but other industries also, where there's a difference of view between how the industry was undertaking certain practices and with respect to how, for example, the department is looking at the taxation.
I think the formula is simple: broaden the tax base and lower the tax rate. So I think as far as the base is concerned, GST has been extended to a lot of these goods and services. Now is the time actually where lower the tax rate element of it has to come into play. And for that to come into play, we must understand that the rate of 18% is actually a high rate, especially on the services, because, these are certain elements which are being directly consumed, for instance, insurance, telecommunication services, and things like that. So which makes the cost of procurement of these services very expensive. And hence, I think the pragmatic approach to start with would be to rationalize the rate of 12 and 18%. How and on what number they would do that is still to be seen. But that will at the same time reduce a lot of litigation which is happening between the two rates of 12% and 18%.
One of the big things that may happen, and it's being discussed a lot, is of course on the online gaming, which may come up. Our sense is that at least for the past period, there could be some kind of assessment being done as to how relief may be provided to the industry, because at one point of time, the government is so supportive of building up this whole industry per se. And we have seen in the past that the past minister also had supported to relook at this. In fact, even when this decision was made, it was clearly stated that it would be reviewed at some point of time during this financial year. So one of the assessment is that the online gaming part of it would be something that they would look at. The other, which even Badri covered, that there could be, and which industry is also looking at, some kind of an amnesty being brought in. And for that, the amendment in law would be required.
All right. So even as we await the finance minister to give us a sense of what has been discussed and what's the way forward, just to take our viewers through, the main issues that were before the GST Council. Rate rationalization, of course, is one thing that's been talked about. So that is something that we will have to wait and watch how that happens. Now, the broad assessment, of course, amongst industry players has been that the 12 and 18% slabs need to be merged, perhaps to say a new rate slab of, that would hover around about 15 to 16%. But that obviously is going to depend on, the government's political call also, because several items perhaps will see an upward movement from the rates that are there at this point in time. So that is a political decision that will be taken. So other aspects, of course, are the inverted duty structure that could be looked upon. Review of online gaming, you've just heard all those experts talk about that. GST reduction on chemicals and fertilizers, again, we'll have to see how that happens, because that's, again, part of rate rationalization. Bringing fuel under GST. Now, this is something that's been talked about for quite a bit now, but obviously it's a state-sensitive subject as well, because several states feel that if it is brought under the ambit of GST, they will be losing some of those revenues, but the benefit will ideally pass on to the consumer. So that is something that will perhaps be deliberated. We don't know yet whether that has happened or not. But just to also tell our viewers, what you see on the screens right now is the finance minister, of course, flanked by senior members of the finance ministry. We are just going to cut in for that press conference in just a bit. Let's, in fact, go across now as the finance minister gets ready to speak.
The 53rd meeting of the GST Council held in New Delhi. The state finance ministers and union territories had joined in there. I also have on the dais with us here the Union Minister for State for Finance, Shri Pankaj Chaudhary ji, Revenue Secretary, Shri Sanjay Malhotra ji, Chairperson CBIC, Shri Sanjay Kumar Agarwal ji, and members of the GST Council, Shri Shashank Priya and Shri Vivek Ranjan. I would request Honorable Finance Minister to brief us on the outcomes, and we would take questions thereafter. Madam, please.
Namaskar, good evening. Today, we had invited the state finance ministers with two things in our mind. As you know, the pre-budget consultations are going on, and it is a normal practice that we call the state finance ministers also to participate in the pre-budget consultation. So the first half of this day, in the morning session, pre-lunch, we had the pre-budget consultation with finance ministers. Post-lunch, we held the GST Council meeting. As you know, the last meeting was held sometime in October last year. And because of elections and states being busy with the campaign, just as we were busy as well, we thought it was better utilized if the time was used for both the budget consultation and also for GST Council. And in this GST Council, therefore, I must upfront tell you that while there were a lot of issues on which the Fitment Committee and the Legal Committee had worked and readied quite a few agenda, considering that we were meeting only for half a day, some agenda were taken up, considerable number for today. But even as we concluded today, we acknowledged the fact that we have ready agenda points which we could not take up today for want of time, which we'll take up in the next meeting. And therefore, it was also decided, keeping in mind one or two matters of urgency, which the states also had in their mind, to hold a GST meeting at the earliest after today, which will be sometime post the budget session, maybe sometime middle of August. Before the end of August is when the next meeting will happen, where the agenda which we couldn't complete today it wasn't tabled also, but just to let you know that there was enough agenda. Some of them got to be discussed today, and the rest which could not be put on the agenda list itself will be carried on for the next meeting. But today, the 53rd GST Council meeting has actually taken a lot of decisions on trade facilitation, easing compliance burden, and giving relief to taxpayers in terms of compliance easing out. So this will benefit the traders, MSMEs, and taxpayers, is my strong view. I will just flag those issues and not get into the details. Later on, you can always ask us the question and we'll go about. First one is that there was a decision taken today and the GST Council recommended waiving interest and penalties for demand notices that have been issued under Section 73 of the GST Act. What are the items which are under Section 73? Cases not involving fraud, suppression, or misstatements. So, for all those notices which were issued under Section 73, for the fiscal years 2017-18, 18-19, and 19-20, the Council has recommended waiving interest and penalties on the demand notices which have been served. And this will be applicable in cases where the taxpayer pays the full amount of tax demanded in the notice by 31/3/2025. So notices were issued for those 3 financial years under Section 73 of the CGST Act. So if the taxpayer comes forward to pay the total amount before 31st March 2025, he shall not have to pay the interest or the penalties which have been normally put on them. So that relief has been given. Again, the Council has recommended, I'm going to the next item. Council has recommended that the time limit to avail input tax credit in respect of any invoice or debit note under Section 16(4) of the CGST Act through any GSTR 3B return filed up to 30/11/2021 for the financial years 17-18, 18-19, 19-20, and 2021 may be deemed to be 30/11/2021. So, for the same requisite amendment, retrospectively with effect from 1st July 2017, the Council has made a recommendation. Moving to the next item. In order to reduce government litigation, the Council has recommended a monetary limit of 20 lakh for GST Appellate Tribunal, 1 crore for High Court, and 2 crore for Supreme Court for filing of appeals. Filing of appeals by the department before these legal fora. Specific amounts, I repeat, the Council's recommended amounts, recommended monetary limits are 20 lakh for GST Appellate Tribunal, 1 crore for High Court, and 2 crore for Supreme Court for filing of appeals by the department. So I go to the next one. Council has also recommended that the maximum amount for pre-deposit, maximum amount of pre-deposit for filing appeal before the appellate authority shall be reduced from 25 crores CGST and 25 crores SGST to 20 crores CGST. CGST is 25 crore, comes to 20. SGST is 25 crore, comes to 20 crore. And that is the maximum amount of pre-deposit for filing appeals before the appellate authority. Also, the pre-deposit for filing of appeal before the appellate tribunal will be reduced from 20% with a maximum amount of 50 crores CGST and 50 crores SGST to 10% with a maximum amount of 20 crores CGST and rupees 20 crore SGST. So that is a recommendation. There are one or two which I am not stating it here for want of time, but the complete decisions will be sent to you by mail. Council has also decided and recommended that amending the provisions of CGST Act to provide that the 3-month period for filing appeals in the GST Appellate Tribunal will start from a day which shall be notified by the government. So, the President of the Tribunal has assumed office, and the said period for filing appeal by the taxpayers will expire on 5th August 2024. But there is a need that we need to give an extension, so we've come up with this decision. The next one I'm moving over to is, in order to help small taxpayers, the Council recommended extending the time limit to furnish the detail and the returns in the form GSTR 4 from 30th April at present. At the moment it is 30th April. The Council has recommended that it be extended to 30th June. And this is for GSTR 4, those returns which have to be filed. This will apply for returns for the financial year 2024-25 onwards. The next one I'm moving on to, the Council has recommended requisite amendment in the CGST rules to provide that interest would not be charged on an amount which is available in the electronic cash ledger on the due date of filing the GSTR 3B return and is debited while filing the said return. This will ease interest burden on the taxpayer. I'm moving to the next decision, which is again taxpayer friendly. The Council has recommended again insertion of a functionality by way of Form GSTR 1A, which would allow a taxpayer to add any particulars of current tax period which he may have missed out on in reporting in the GSTR 1. So if he missed out on reporting in GSTR 1, there shall now be a form called GSTR 1A in which he'll be able to do that for the current tax period or to amend any particulars which are already declared in GSTR 1 for the current tax period before filing GSTR 3B return for the current tax period. So one gets filed if there's a missed out fact or you've done some error, you can correct it in the GSTR 1A. You can't, of course, go back for the current tax period is what is being said. Then there is going to be a rolling out of biometric-based Aadhaar authentication in an all-India basis. You know that we ran a pilot in Gujarat, also a pilot in Puducherry. There have been very good inputs coming out of it. So this will help us to combat fraudulent input tax credit claims made through fake invoices. In the cases where the applicant had opted for Aadhaar authentication and where the case has been identified on the basis of data analytics and risk parameters on the system, these have been tried in the GST Suvidha Kendras, and this will be taken up on an all India basis. So the GST Council has today recommended to roll out the biometric based Aadhaar authentication of registration of applicants on an all India basis in a phased manner. So if these are matters which came through the legal committee, there were a couple of clarifications issued by the Fitment committee. They've issued quite a few, but I'm highlighting one or two. Council recommended to prescribe a uniform rate of 12% on all milk cans, meaning steel, iron, aluminium, which are irrespective of the use. They are called milk cans, but wherever they are used, that will be the rate applicable, so that no disputes arise out of it. They have a standard shape, so that will determine what is a milk can and what is not. Then Council also recommended to prescribe a uniform GST rate of 12% on all carton boxes and cases of both corrugated and non-corrugated paper or paper board. This will in particular help the apple growers of Himachal Pradesh, the apple growers of J&K, whose request it has been for quite some time. The Fitment committee has also recommended it now. There are details about HSN codes on this matter, but simple step is corrugated, non-corrugated, carton boxes made of paper or corrugated paper, non-corrugated paper or paper board will all benefit from this. Council also has clarified and recommended that the clarification be put out on that all types of sprinklers, including fire water sprinklers, will attract 12% GST, and to regularize the past practice on an as is whereas basis. Coming to the next point of solar cookers, Council recommended to prescribe 12% on all solar cookers, whether it has single or dual energy source. On services, there are just 2 points which I'll highlight to you. Services provided by Indian Railways to the common man, sale of platform tickets, facility of retiring rooms, waiting rooms, cloakroom services, battery operated car services are being exempted from GST. Further, intra-railway supplies are also being exempted. The other, which is very important, service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Please let there be clarity. Hostels which are for students which are within a resident which are within an educational institutions are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. But listen to this, please. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. So it can be hostels run by Samaj, so that poor people belonging to their Samaj come there, stay there for 20,000 rupees per person per month. They will not be worried about GST at all. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days. So it's not like, I don't want to take the name of branded names. It's not as if tourists who come and stay for 3-4 days and go away, no GST. No. It is meant for students, and therefore if they come and 90 continuous days if they stay, yes, they're exempt. Up to 20,000 rupees per person per month. So hostels run for people who come from rural areas and stay in some hostel which is run by either communities or social welfare organizations, not of the government, even private. They are not going to be touched by GST, provided it is 20,000 per person per month, and provided that is continuously occupied by that person for 90 days at least. I've just highlighted a few points, both from the legal and fitment committees. More can be answered even as you ask questions. There were quite a few new ministers. Was there a list of the committees? Some committees have had newer ministers taking charge in the place of ministers who were earlier there. As we go along, I'll mention it. Of immediate interest will be the Rate Rationalization Committee, for which the Deputy Chief Minister of Bihar, Samrat Chaudhary, has been given charge.
Ma'am, should we open the floor for questions now? Yes, please. I'll request all of you to begin, and as and when you ask your question, please specify your name and organization. I begin in the center, 124. Ma'am, 124, the first question.
Ma'am, good evening. Shishir from Hindu Business Line. My question is about this online gaming, casinos and horse racing, because in the last meeting there was a recommendation that it will be reviewed after 6 months, the progress. So has there any decision taken, because so many notices have been issued to companies? So is there any thing?
It didn't come for discussion, nor was it taken today. It wasn't on the agenda also. It wasn't on the agenda, it didn't come for discussion, no, it wasn't taken up.
To the left, 265.
Hello, ma'am. Good evening. Ma'am, this is regarding in terms of the appellate tribunal, you had mentioned that 5th of August would be the date of filing, the extended date of filing. Just to clarify the operationality of the appellate tribunals, we understand that the principal bench has a head appointed, but in terms of the operationality of the other benches, could we get some clarity? Like the day?
Revenue Secretary is going to sit with the one of the judges of the Supreme Court and the committee, which otherwise is the competent authority to choose members who will be in various benches. That meeting is yet to take place. It will happen soon, and the moment that is done, people will be appointed, and then it can all activate.
266 next to the left, ma'am.
राजीव हूँ दैनिक जागरण से। मेरा सवाल है कि जो आधार ऑथेंटिकेशन के लिए जो आपने नियम लाया है, तो ये जो पायलट प्रोजेक्ट होगा गुजरात और पुडुचेरी में, ये तो फर्स्ट की ये कब से लागू होगा? दूसरी बात, अभी जो जीएसटीएन पे जाकर रजिस्ट्रेशन कराना होता है तो वो ऑनलाइन भी हो जाता है, अगर तो अब क्या फिजिकल वेरिफिकेशन उनको कराना होगा?
नहीं, ऑनलाइन में जो वेरिफिकेशन हो रही है ठीक हो रही है, होने दो, उसका कोई बदलाव नहीं कर रहे हैं हम, वो चालू रहेगा। मगर ये सुविधा स्टेशन जो सर्विस सेंटर बनता है, उसमें जाकर के इकट्ठा सभी जो रिक्वायरमेंट है, आधार है, आपके बायोमेट्रिक वेरिफिकेशन है, आपके पेपर्स है, सब इकट्ठा देने में गुजरात में पायलट प्रोजेक्ट का एक्सपीरियंस बेस करते हुए मैं बोल रही हूं, इन अ मैटर ऑफ 15-20 मिनट्स ऑल पेपर वर्क इज डन एंड रजिस्ट्रेशन हो जाता है नया कंपनियों का। ऑनलाइन में करने के बाद बोर्ड्स में भी बाद में जब वेरिफिकेशन सही नहीं हुआ या कुछ गड़बड़ है, बायोमेट्रिक ठीक से नहीं हुआ, फिर ये फिजिकली वेरीफाई करने के लिए आप जा रही हो। मगर इस सुविधा पोर्टल के सुविधा सेंटर के द्वारा जो होता है, सब एक ही जगह इकट्ठा 15-20 मिनट्स के अंदर हो जाता है, फिर उसमें फिजिकल वेरिफिकेशन का आवश्यकता नहीं होता। सो एवरीथिंग हैपन्स इमीडिएटली, ज्यादा टाइम ना खर्च करते हुए, अनलेस बियॉन्ड दैट वेरिफिकेशन कुछ और डेटा मिसमैच होता है तो दोबारा उनसे ताल्लुक रखना पड़ता। सो इट एक्चुअली इनफैक्ट इन द मीटिंग टुडे, आंध्र प्रदेश का मिनिस्टर जो नया आया है, उनका ये कहना था कि 2-3 लेवल पर स्टडी करने के बाद उनका एक्सपीरियंस ये दिखाता है कि ऐसे फिजिकली आकर वेरीफाई करके करने वाले के कारण फेक रजिस्ट्रेशन कम हो रही है। गुजरात का भी एक्सपीरियंस वही प्रूव करता है कि वंस दिस काइंड ऑफ अ वेरिफिकेशन विद बायोमेट्रिक ऑथेंटिकेशन हैपन्स, फेक कंपनीज का रजिस्ट्रेशन बिल्कुल नहीं होता। इसीलिए ये मेथड अभी पायलट टेस्ट के द्वारा और आंध्रा के स्टडी के द्वारा हमें ये जानकारी मिल रही है कि दिस विल बी फिजिकल वेरिफिकेशन और फेकरी का हम कम कर सकते हैं।
नहीं, एक सवाल,
272
जो कैंपस आउटसाइड कैंपस को जो एग्जाम्पशन मिलेगा जीएसटी से, उससे स्टूडेंट्स को क्या फायदा होगा? कुछ
बिल्कुल स्टूडेंट्स का फायदा होगा, क्योंकि कम्युनिटीज बहुत सारे स्टेट्स में उनके रूरल बच्चे के लिए सुविधाजनक सस्ते में हॉस्टल्स दे रहे हैं। हर एजुकेशन इंस्टीट्यूशन में रेजिडेंशियल फैसिलिटी नहीं रहता, इसीलिए रूरल एरिया से जो बच्चे सिटीज में आकर पढ़ने के लिए आते हैं, उनके लिए सस्ते में जब अकोमोडेशन मिलता है और उसके ऊपर जीएसटी जब नहीं है, उनको फेवरेबली देखना चाहिए। बच्चों का सुविधा ही है वो।
Good evening.
Rollout of the Aadhaar-based authentication as he asked.
What?
When will be the rollout of this Aadhaar?
I already said that it will happen in a phased manner all over the country.
From when?
From now.
Okay, from.
Good evening, ma'am. This is Ruchi Bhatia from Bloomberg News. I have two quick questions. One on the rate rationalization GOM. By when will the new GOM with the new members be able to submit their report? And the second question on, you also met the state finance ministers for pre-budget consultations. Can you throw some light on some of the key recommendations if you can?
See, the rate rationalization group of ministers, since the time it was constituted, has been working. It's not as if it never worked. So quite a lot of substantial work has happened. Now, because you have a new deputy chief minister taking charge of it, I would want to give him that time for him to understand through his team as to how far they have gone. What was decided in the council today was, अगले बार जब we meet, group of ministers, वो नया deputy chief minister जो chair है अभी, वो council को ये report पेश करें कि status क्या है अभी, कितना क्या काम हुआ है, rationalization के काम में कितने आगे बढ़ चुके हैं और काम क्या बचा हुआ है। ऐसे करके आज का स्टेटस विस्तार से अगले मीटिंग में देने के लिए डिसीजन लिया गया। उस मीटिंग में ये भी करेंगे, हम रेशनलाइजेशन के ऊपर चर्चा शुरू करेंगे। ये नहीं है कि उसी मीटिंग में रेशनलाइजेशन का सभी डिसीजन हो जाएगा, नहीं, क्योंकि पहले बार जीओएम के द्वारा एक प्रेजेंटेशन होगा, चाहे वो रिपोर्ट ड्राफ्ट है, फर्स्ट ड्राफ्ट है या फाइनल ड्राफ्ट है, वो मुझे मालूम नहीं, वो ग्रुप ऑफ मिनिस्टर्स को मालूम। वो पेश करेंगे, उसके ऊपर चर्चा होगा। So we'll start the discussion on rate rationalization, and that committee will give us a status of where the rationalization work has progressed, how far it has progressed, what has been achieved in it till now, how much more they will have to do. So essentially in the next meeting, we start that discussion.
One.
Huh?
Which is going to be sometime in August.
Yes.
And on the second question on the state finance ministers meeting.
It was a good discussion. A lot of every minister has given their speech in written also. Northeast ministers were of the view that DONER, Department of Northeast Affairs, will have to work together with them so that they get more resources for their use. State-specific suggestions were there for more infrastructure. This was promised earlier. Would you want to continue to do it, or will you do it now? You know, things like that. And also from the point of view of devolution, the discussion which has to happen in the Finance Commission, while all ministers agree it has to happen in the Finance Commission, they mentioned that also, that it has to be taken up with the Finance Commission. Broadly.
127 next.
Just want to let you know that there are 11 new ministers in the GST Council. 11. So Andhra Pradesh has a new minister, Bihar, Chhattisgarh, Haryana, Madhya Pradesh, Mizoram, Odisha, Rajasthan, Sikkim, Telangana and Tripura. 11 states have new ministers.
127 to the left.
मैम तरुण शर्मा फ्रॉम जी बिजनेस. मैम आपने ये तो क्लैरिफाई कर दिया कि ऑनलाइन गेमिंग पे कोई आज डिस्कशन नहीं हुआ, लेकिन मैम कंफ्यूजन जो है वो सेक्शन 11A को CGST एक्ट जो इंसर्शन है, जिसमें आपने कहा कि हमारे पास पावर होनी चाहिए, हमने जो पेनल्टीज लगाई हैं उनको लेविड करने की और हटाने की, तो मैम इस पे आप क्लैरिफाई कर पाएंगे?
नहीं, आज मुझे ऑनलाइन गेम के ऊपर कोई कुछ कहना नहीं है.
अच्छा मैम, इस पे ये सेक्शन 11A को CGST एक्ट में इंसर्शन का क्या मीनिंग होगा?
You can go on asking me any number of questions on it. Since in the council today we didn't discuss anything, I am not empowered to say anything on it.
Okay, ma'am. Second
next question 56.
मैम आलोक प्रियदर्शी फ्रॉम CNBC आवाज. मैम इंडस्ट्री की एक मांग थी फर्टिलाइजर पर GST एग्जाम करने को लेकर, फिटमेंट कमेटी से शायद प्रपोजल गया था, तो क्या रीजन रहा फर्टिलाइजर पर जो GST एग्जाम करने की मांग थी नहीं होने की? क्या इसको आपने ये इसके ऊपर क्या डिसीजन हुआ है?
Do you want to talk?
इसके ऊपर में जो निर्णय काउंसिल ने किया है वो उससे, क्योंकि ये एक बड़ा मुद्दा है, तो इसके ऊपर में जो GOM रिकॉन्स्टिट्यूट किया है उसको काउंसिल ने रेफर किया है. और जो आपने 11A का जैसे FM ने कहा, ये पहले से जो हम कई सारे केसेस में एज इज वेरियस बेसिस पे हम ऑलरेडी रेगुलराइज कर रहे थे, इसका संबंध उससे है, इसका ऑनलाइन गेमिंग से कोई ताल्लुक डायरेक्टली नहीं. तो एज इज वेरियस बेसिस पे जो हम एग्जेम्प्ट करते हैं उससे है.
अगला सवाल 124 सेंटर में.
मैम मैं पीयूष पांडे हूँ TV9 भारतवर्ष से. आपने जो लिटिगेशन के लिए सीमा तय की है, बेसिकली ट्राइब्यूनल, हाई कोर्ट और सुप्रीम कोर्ट के लिए, इससे इतर जो नीचे के मसले होंगे वो किस तरह से निपटाए जाएंगे? क्या मीडिएशन से या कोई और तरीका होगा?
इससे इतर आपका क्या प्रश्न? आपका कुछ
20 लाख से नीचे होगा.
20 लाख से नीचे यदि होगा तो हम उसमें अपील में नहीं जाएंगे. तो वो कमिश्नर अपील के लेवल पे जो भी निर्णय हो जाएगा उसको सरकार मान लेगी, जब तक कि वो कोई पॉलिसी रिलेटेड मेजर नहीं हो, तो उसमें हम अपील नहीं करेंगे आगे. टैक्स पेयर तो अपील कर सकता है, यदि वो संतुष्ट नहीं है तो वो अपील कर सकता है. उसी प्रकार से हाई कोर्ट के लेवल पे, अगर ट्राइब्यूनल के लेवल पे कोई निर्णय हो जाता है जो कि 1 करोड़ से कम राशि का है, तो गवर्नमेंट उसमें अपील में नहीं जाएगी, टैक्स पेयर उसमें अपील में जा सकता है.
ये क्या हमारे लिए सरकार को.
Number 16 to the left.
Ma'am, Meghna Mittal from Money Control. The petroleum minister recently said that they will work towards bringing fuel under GST. What is your view? Is it an uphill task? Could there be a discussion in the coming meetings?
See, today we didn't discuss about it, but I'm still answering your question only to say that petrol and diesel, even when GST was implemented, I distinctly remember Senior Minister then, Shri Arun Jaitley, talking about it, that the proviso exists already in the Act, meaning GST, petrol and diesel can be handled, for which the law has been already embedded. So what is pending is, once the states agree, in the council they have to decide what will be the rate of taxation. Once that decision is taken, it will be put into the Act. So the indication or the intent of this central government, even as the GST was implemented, was eventually sometime petrol and diesel can be brought into the GST. Then we didn't have to go and amend the law and everything else. The provision has already been made that it can be brought into GST. The one and only decision which is therefore expected is for the states to agree and come into the GST Council and then decide what rate they will agree on. So at the moment, the intention of the GST as it was brought in by Shri Arun Jaitley is to have the petrol and diesel in GST. It is up to the states now to say, all right, we'll all come together and get into GST, therefore come into the council and then decide on what will be the rate. So the intent of the central government and intent of my late predecessor was clear. We want the GST to include petrol and diesel, but it's up to the states.
Number 45 to the left.
Any discussion has happened which is with regard to rationalization of GST rate on co-premium, insurance co-premium?
No. 271 and then 10.
Hi ma'am, good evening. I'm Kriti from Informist Media.
But the point that I want to put before you is, you asked for insurance related, right? The fitment committee has received formal requests only now. So obviously it cannot be taken up in this meeting itself. They'll have to work on it and maybe comes in the next. Maybe. That's not yet they'll have to work on it.
Yeah, hi ma'am, Kriti from Informist Media here. So, exemption on railway services. Since railways are vast, the services are vast, would you be able to help us understand what kind of revenue foregoing would happen post this? Would it be minuscule, significant, and if there is an estimate figure on it?
We don't have the numbers, but I may tell you that these services were already exempt. It was only, about a year ago that we brought them on their request under the GST regime. Now we have gone back, so the revenue foregone will not be much.
264 at the back left.
Question is related to the GST rationalization only. So the discussion on the rate rationalization has been going on since 2021. So could you please share what specific items are being discussed for this? This is Haris from News 18. So
what specific
items are being discussed for rate rationalization
as I said, the committee, which is a group of ministers, will do a presentation to the council in the next meeting. Then we'll know what issues are being taken up by them, how far they've progressed, and what will be left for them to do.
We'll take the last question here, number 10.
Ma'am, I am Monica from the New Indian Express. Ma'am, a lot of companies, they have filed writ petition against the council's decision related to GST on corporate guarantee. Was that taken up in today's meeting?
Yeah, so corporate guarantee here, it is being clarified that in case it is for services or goods where whole ITC is available, the corporate guarantee will not attract a GST. So that is a major relief, because most of the goods, services are are taxable and they are not exempt. So all of them will get this relief.
Okay, and also regarding this anti-profiteering, so introduction of sunset was expected in today's meeting in the anti-profiteering provisions. Was that also discussed?
Yes, that was taken up today.
Yes, and it was decided that this will be sunset. So the last date that has been fixed for this is 1st April 25. However, the cases which have already been registered, they will continue to be heard and they will be decided. The other decision taken in this regard is to shift from CCI, the Competition Commission of India, the hearing of these cases, to the principal, to the GST 80 as and when it becomes functional.
Also, sir, ma'am, I would like to know about this pre-deposit new limits. So now, if someone has already paid the extra, if someone has already paid this pre-deposit according to the previous law, now will they be eligible for the extra amount they have paid for the refund?
This is prospective.
Okay. Okay.
Thank you so much, ma'am. Just one information which I want to use this opportunity because I'm before the media, and through the media I want to reassure the assessees that our intent is to make the GST assessees' life easier. We are working towards less and less compliance. I want to underline the fact on behalf of the CGST that notices are not being sent here left, right and center, because most often we are asked, why so many notices? Don't you know what's happening and so on? I want to use this occasion to let you know that only 1.96% of all active tax assessees have been sent any notice from the central GST. So if there are 1,14,939 active assessees, it is only to less than 2%, 1.96% assessees, 1,14,939 assessees. Less than 2% of them have been sent notices from the central GST. I want to be clear on this. Our intention is to make it easier, simpler, less cumbersome. And sooner that we talk of more and more ease of doing business, we'll follow that. And that is proven by this data, that as of 31st December 23, only 1.96% of these assessees have been sent a notice or a notice. So not beyond that. So 1.96% of the 1,14,900 number of active taxpayers here, 58,62,886. So this 1.96 is in actual number 1,14,939. All right? Clear? 1.96 is in actual number 1,14,939. So only that many have received notice. So CGST is harassing. None of that. In a large country like this, CGST has sent only this many notices. I want to underline the fact here. Of course, states would do their own. Each state can do their own. I'm not coming on to that. Thank you.
Thank you so much, ma'am.
All right, so that was the finance minister over there reading out what's happened at that meeting. Not a lot of decisions really taken today, but do remember that this is the first meeting of the GST Council after the new government has been sworn in. So there are obviously changes that have happened. Let's in fact examine what's happened in this meeting. Let's go across to Mr. S.C. Garg. He's the former Finance Secretary. He's joining us on the broadcast. Mr. Garg, good evening. Thank you very much for speaking to us.
Yeah, good evening.
To begin with, Mr. Garg, it does seem that large part of today's meeting was essentially dedicated to easing the compliance burden, and some of those things that have been announced essentially a step in that direction.
Yes, actually there was a lot of expectation, this being the first meeting also before the incoming budget, and also in which it is promised that the government would lay the roadmap for Viksit Bharat 2047. So how do you envisage the new tax structure? GST is very important. So none of those key issues, policy issues, rate rationalization, gaming, etc., were not discussed in this meeting. Of course, the council focused on easing the life of taxpayers a little bit more by sort of reducing the burden on penalties and interest, and also doing some rationalization in hostel rent taxation, etc. So a good meeting in the sense that you dealt with the basic housekeeping kind of issues and what touches the taxpayers, but policy issues were not taken.
Right now, a bit of, the part for reducing the litigation burden was also discussed. Now, how do you see that going forward in terms of, cutting down the amount of litigation for both the government in this case as well as those who actually, private individuals?
So as far as the taxpayers are concerned, they have the liberty to file. There's nothing changed. What they have got is a smaller amount of tax which they have to prepay before filing appeal. So in that sense, they have some relief, though I don't think this is very big, major sort of relief if you reduce 25 crores to 20 crores or something. But that 20% to 10% will bring about significant sort of relief to the taxpayers who want to file. It was from the government side, where this whole measure was actually intended, that the government would, to reduce the litigation, make no appeal in small matters. It was good that the GST Council has suggested the limits for each level of the appellate court. That's fine, but there is a caveat there, which the Revenue Secretary read out, that even if the amounts are smaller than what the limit has been prescribed, if there is a policy matter involved, the government would still have the right to file appeal. Now, what is the policy matters? If somebody has been sort of charged or has been given relief because the classification issue was the reason why the relief was granted, it might as well be treated as a policy issue. And therefore, again, it will, how does it pan out in practice? It should be good if the government reduces filing for in small matter, but I hope it doesn't get sort of waylaid or distracted by what is the policy matter.
Right. Mr. Garg, finally, going ahead, do you see this as a signal perhaps of the much-awaited rate rationalization? There are a few steps that have been taken, not significant today, but do you perhaps see this as a signal of the government's intent at least?
I think so, but again, the structure of the process need to be taken into account whenever you sort of translate the intent into what is likely outcome. So the new committee chair is there, which will go into the rationalization issues, rate rationalization. the minister said that in the first meeting after the budget, they will do a stock taking of where they are and what they intend to do it. But that's only an opening gambit of explaining or taking stock of the existing state affairs. It doesn't say anything about whether the government is in favor of smaller number of tax rates and which way. I think that appears from what has been discussed and stated today to be a reasonably long drawn out affair. And that is where, when I've said initially, because we are at a very crucial juncture. The new government has taken office. The budget is coming up. You have to lay down the path for next 5 years and also for Viksit Bharat. So I hope if they can expedite this rate rationalization business in next 5 to 6 months at best, sooner if possible. But if it gets delayed beyond that, then the intent may not actually be translated into action soon enough.
Absolutely. Thank you very much, Mr. Garg, for joining us on the broadcast. Well, good beginning, perhaps, at least, is what we can say. Thank you for joining us. Also joining us on the broadcast right now is Mr. Saurabh Agarwal from ENY and Mr. Rajat Bose joining us from Shardul Amarchand Mangaldas. Wade Jain also joining us from VGA Legal. Mr. Agarwal, to you first. A lot was talked about, but not much essentially has come out of this first meeting. Perhaps, we can give the government some leeway in the sense that it was the first GST Council meeting right after, the new government was sworn in. But housekeeping measures at least taken, what do you feel?
So if you look at the way the GST Council and the way the FM was aligned to the fact that they are giving an interest waiver and a penalty waiver for our cases up to FY 1920, which have been issued under, where the notices have been issued under 73. It clearly shows that the intent is to resolve disputes. Similarly, giving you a time period to avail the credit for the financial year up to 2021 till 30th November 2021 is again a part wherein the finance minister is showcasing that they want to resolve the disputes. Much talked about Section 11A, which was similar to that of Central Excise Act. I think the FM has not commented upon it. My personal take is that as we go through the fine prints, once the council minutes are out, it will clearly come out that 11A is there. And if 11A is there, the intent of the government is there to resolve the disputes around like online gaming, secondment, foreign shipping line and airline issues. So much has to be seen over there. But when you talk about the key reforms per se around the rate rationalization, of course, that was missing. And that was not expected also as a part of this particular meeting. Corporate guarantee also, they did say that there is a clarity which is being given. So I think we'll have to go through the fine prints. I think whatever is expected and whatever we are seeing in the media coming across, once we go through the fine prints, it will be more to comment upon as to what has been amiss and what has been done by the government. But of course, amnesty scheme has been much talked about, which is not finding the place. So that's a clear thing wherein we'll have to look into the next council meetings as to how it looks into.
Right, as you said, the intent does seem right. Mr. Rajat, if I could bring you in now. It did appear that a lot of the focus essentially was on easing the compliance burden, as the finance minister herself said. So in that sense, how do you see this meeting? And the second part, of course, was, they're trying to reduce the litigation burden for the government at least.
Yes, I think on both aspects, the GST Council has done well in terms of easing the compliance burden, at least on the small traders and the MSME sector. They've increased the timeline for filing the GSTR4 returns. So I think the council should be complimented for that. As far as the GST litigation is concerned, again, it's a good move. At least it's a start where they have defined the monetary limits for appeals to the GSTAT as well as the High Court and the Supreme Court, because I believe that I'm expecting a lot of litigation to start once the GSTAT is set up, and there would be a flurry of appeals which are being filed. So this again is a good move where the government can possibly limit, at least to some extent, the litigation which is expected in the next few years. Having said so, there was a statement which was made by the Revenue Secretary, I think, which said that this doesn't apply in policy matters. So, which we probably would need to see the fine print as to what that means. Maybe, if there is a point of law, an important question of law, then they would not follow the monetary limit in that case, and they would still go ahead and file an appeal. So that we'll need to see once the fine print is out.
Oh, yes, absolutely. Ved Jain, your thoughts on what's happened today? A lot of it, of course, essentially, she talked a lot about reducing that burden for the government in terms of litigation, but perhaps keeping people who are being assessed also in mind. So give us an overview of what your first thoughts were.
See, today meeting, as I see, was the 53rd and the first meeting after this general elections. And I believe the budget is in the offing, and the next one the budget is coming. And the finance minister, what today have done there is they have given a lot of relief to the taxpayer. The entire focus of today's meeting, as it comes out, is only to give some relief to the taxpayer. Or if you see what has been done, there are three important takeaways from the today's meeting. One important is that all that demand which has been created for 3 years, 17, 18, 18, 19, 19, 20, in case the payment is made by the due date which they have put at 31st March 25, then the interest and penalty has been waived off. That's a very big relief. I believe that's a relief which has been given for the there. Then the period with which the GSTR4 period has been extended. And talking about the litigation, I believe a lot of relief has been given. And I may just bring here to a point that similar tax effect circular is applicable in case of direct taxes under the Income Tax Act. And it is a time tested there in income tax. No appeal can be filed against commission appeal order in case the tax effect is less than 50 lakh rupees. And if it is less than 1 crore rupee, then no appeal before High Court. And if it is less than 5 crore, no appeal before the Supreme Court. And then policy matter is also well defined in that circular. So that is where any legal provision has been challenged and which has been struck down. So that's where the appeal can be filed, because then it can have impact on cases beyond that amount also. So that's why always a caveat is created that yes, in case there is a litigation involving a legal point where the provision has been struck down or a constitutional validity has been challenged, then those provisions will be still subject to appeal because it can affect other cases also. So I believe today, if you look at the overall perspective, the way this meeting, the finance minister has explained the decision which has been taken, they are all to give relief to the taxpayer. And frankly speaking, what was the expectation today and what was in the media before that, what can be the agenda? Nothing on this gaming, horse trading, etc. Restructuring, she said, no, the new minister has taken over as chairman and then he will look into that. We will come back again. Some relief has been given on guarantee commission that in case you are eligible for input credit and you are fully taxable, then of course there will be no GST on the guarantee commission, etc. And some part somewhere, and this is relief on this student hostel, 20,000 rupees up to, I believe this will be a big relief because this is a concession given, keeping the mind of people's students coming from the rural areas. And because the colleges and schools do not have the hostel facility, so there are private institutions or private bodies which have built up hostels and provide this. And she has put a caveat of 20,000 rupees per person per month, and at least for 90 days, so that people do not use this facility, misuse this facility in the case of a guest house, etc. So I believe overall, the objective is to extend relief to the taxpayer. Secondly, in order to avoid litigation. And thirdly, all policy matter regarding rate structure, etc., except few changes where she has reduced the rate of 12%, etc. in some cases. There is no other agenda which I believe today has been taken. So I believe post-election, this is one of the good meetings which has happened. And I'm reasonably sure in the coming meeting also, I think which she said, yes, the meeting will take place and a restructuring agenda will be there, but not final. It will be some discussion. But I think there may be, some disappointment with people like in the gaming and etc., which where they were expecting a big relief in this meeting, etc.
Right, absolutely. As you're pointing out, of course, that wasn't touched upon. But Saurabh Agarwal, if I could come to you, she did talk about petrol and diesel products. She didn't say that we're going to take it up very quickly, but she did seem to suggest that it is something that could be brought under the ambit of GST, but depending on whether the states agree or not. So how do you see that? Is that something that we should look forward to?
So I think there have been much discussion around bringing petrol, diesel, ATF gas within the ambit of GST. If you ask my personal take would be that they would likely bring in ATF and gas over a period of time into the ambit of GST. I think petrol and diesel will still take some bit of more time to bring it under the ambit of GST. While, of course, the government is preparing for the same, and that's why they came up with that draft excise bill wherein they have sought the comments from the industry. But that appears to be a bit prolonged type of a decision. ATF and gas is much talked about, which is easier for them to get into the ambit of GST.
Right. Rajat, if I could talk to you a bit about what was expected in terms of rate rationalization. Now, there have appear to be some indications that the government is very serious about this and it could be taken up in the following meetings. The second meeting perhaps that takes place in August is the broad timeline that we are hearing about. What do you think in terms of that intent? Did the government signal it in this meeting at least?
Well, see, the intent has always been there. The problem, regarding rate rationalization really is doing the maths around it. I mean, there are so many products which we are looking at, services that we are looking at. It's a massive exercise. And now, the FM mentioned that there are, about 11 or 12 new ministers in the council. So, the perspectives also change. The thought process changes. So it is a massive exercise. I don't really think that we are anywhere close to rate rationalization, at least not in the next couple of years at least. Yes, the homework had begun some time back. It is a process. It's a work in progress. But to my mind, honestly, I think we are a bit far away from rate rationalization at this point of time.
Right. Also, what I wanted to understand at this point in time is from Mr. Jain. Mr. Jain, it did appear that the FM seemed to be stressing on the ease of doing business. Do you think that this is a precursor for what we could see in the budget? Is that something that they could bring about? Given the stress that was laid on it in today's GST meeting, ease of compliance, ease of doing business, do you think this gives us an indication of what could be expected in the union budget?
Yes, definitely yes. I believe that today's meeting resolution which would have been passed will be enabling provisions so that the finance minister can propose necessary amendment in the coming budget. So she would have definitely got that approval from the GST council so that she can move the amendment in the parliament in the budget session on that part. And on that aspect, you have raised two issues about the rate restructuring and about the petrol and diesel being brought under the GST. So rate structuring is a difficult exercise, politically sensitive and pull the pressure. You will recall when in 2017, this GST was introduced. For the 1 year or 1.5 year, GST Council was always worried and agitating over the issue, which item to be brought in and the rate should be brought down or brought in. So similarly, when the rate restructuring exercise will be on and this ultimately has to be taken up, this will be highly sensitive, politically also difficult and pull and pressure issue, because then everybody will like that my item should be brought down from 18 to 12%, why my item should go from 12 to 15%. So it's a highly sensitive. On petrol and diesel, the finance minister made a very, bold statement today that the enabling provision is already there in the statute. It is only the GST council which has to approve the day that the petrol and diesel will be in the GST. But the biggest challenge is that in today's date, in case GST, petrol and diesel is to be brought under GST, the GST rate has to be more than 100%, which is very difficult for a government to announce that the GST is more than 100% on petrol and diesel. That's why the challenge, I believe, still continues on petrol and diesel.
Right. Do stay with us, all of you gentlemen. We've also got a reaction from Kerala's finance minister. Do remember that the first half of today's meeting essentially was about what the states want the finance minister, from the finance minister rather, in the union budget. NDTV Profit Janani, in fact, has spoken to KN Balagopal. And let's see what he wants.
We requested for increasing the 3%, now 3% plus 0.5% for power sector. This is the borrowing limit. We requested for increasing at least 0.5%. Some other states also requested the same thing, right, because for more capital investment, more for infusing more fund to the economy. This request is there from different states.
So. Right. And on the GST Council agenda, anything on ENA or for human consumption on that matter?
Yeah, that is there some. Earlier we discussed this matter about this thing. The ENA for human consumption is not coming under GST.
Right.
Other areas only it comes. So for that clarification, some correction came. And earlier there was a proposal for bringing the ENA for human consumption also inside the GST. That states are not accepting and council also not accepting.
Okay. And lastly, just on in terms of the online gaming, a lot of demand notices also went. Anything on the review of your
review that is there up to particular date, earlier date.
Did it happen today?
Yeah, that is accepted.
All right. Mr. Agarwal, if I could come to you now, one of the things that was spoken about today was the exemption of GST for railway-related services. How do you read that, and do you perhaps see this as something that could hit revenue?
I think 2 points around it. First, around the services pertaining to railway, such as cloak charges, etc. I don't think so that will impact much of the revenues for the government, because I don't think so that there's too much of a revenue coming out of these services. That's point number one. Point number two, which they talked about, wherein there are supplies, intra-state supplies made by railways to themselves. So it is like railway in Maharashtra state supplying to railways in Delhi state, given that it is treated as a taxable supply under the GST. They are saying that they are exempting it, which means that the burden on the consumer should go down, because of the fact that otherwise this would not have been creditable and the cost would have got passed on to the consumer. And therefore, when the cost is going down, the cost of ticket should also come down to that particular extent.
Mr. Bose, any thoughts on that, and also any thoughts on what the biometric verification via Aadhaar project that is being taken up? Of course, the FM said that it will be done in phases, but there seems to be a lot of emphasis on that.
Yes, and rightly so. I think it's a very important tool to check the menace of these fly-by-night operators who just open up shops to issue invoices without underlying supplying of goods and services. So it's an extremely helpful way of ensuring that these kind of frauds don't happen. So I think that is an extremely good move. Yes, it's again a massive exercise to launch it on a pan-India basis. The Gujarat model has been successful. There is no doubt on that. And we've also seen, of late that even when you're going to take registration for a company, the emphasis is more on physical verification. The officers do come, and check whether the companies are actually existing, whether their board is there, and they do take it quite seriously. So I think this is a good, I would say, a good move from the government, which would help in reducing these fly-by-night operators. On the railway front, I echo the sentiments of Saurabh, and I think that's something which probably may not impact so much, given that the revenue collections anyways are touching record numbers in the last 1 year or so. So I would say that the railway the exemption should not impact the revenue collection as such, but it definitely would help the consumers in terms of reduction in costs.
Any thoughts on, that ambition of having petrol and diesel under the ambit? Now, she's made a clarification saying this is something that has always been a thought process at least, but it will require a lot of work. Obviously, this does seem like not such a short-term project.
No, absolutely not. It is again a project which would require a lot of, I would say, managing expectations across different states. And I would say that the task has become slightly difficult, given the results of the Lok Sabha elections. So yes, it's a tricky situation, but it's a situation, if the government can manage to do this in this term, I think that's going to be one of the biggest achievements of this government. It is definitely going to help bring down inflation. It will help in reducing cost to a large extent. And I think a lot of issues regarding input credits being blocked, etc., so on and so forth, would go away. So, but look, we never thought GST will be a reality, but it did. Right. And, we hope that in this term, the government can do a miracle and get the petroleum products within the ambit of GST.
Right. Mr. Jain, one of the expectations was that perhaps the inverted duty structure is something that will be taken up. Now, we've not heard anything about it. How do you see that?
Yes, I see. Whatever was being discussed in the last 1 week about this council, I think that none of that was the part of the agenda.
Well, I can see everybody smiling about that, that it wasn't. But anyways, please carry on.
And then the inverted duty is a challenge because the footwear industry, the fertilizer, she said, yes, these are the issues. But she said nothing could be taken up today. Because what I understand now, today's meeting was mainly on legal issues and ease of doing business for the taxpayers, etc. But probably that was the only agenda which was taken up today. And that's why I see that the rate she had touched minimum, only few concessions have been announced, where I believe there was already a agreement and already consensus that there is no issue about arising it now. But now coming to the 2 points which have raised, intra-railway services have been exempted because you cannot provide service to yourself. I believe now similar demand will be there from the power sector, public sector companies, etc. Which they have different branches, etc. So there is a big challenge coming in there also. So that challenge will again come back on that part also. So that's another issue which will come up to haunt this GST council. Once intra-railway services have been exempted, why in the other sector, otherwise intra-departmental, intra-branch services should be taxed? That may be a challenge which may be coming up on that part.
Let's get Mr. Agarwal's views on that. Do you think that that's going to be a challenge?
I think it's one of the big issues as far as the power sector is concerned. So goes for many of the petroleum companies as well, with respect to that intrastate supply of services, whether it is taxable or not, because it's add to the cost if it is considered to be taxable. So I completely agree with Mr. Jain that likely there would be a demand coming from many of these sectors to exempt intrastate supply of services to goods by these excluded sectors from GST.
Right. Mr. Bose, any thoughts on that?
Well, again, wishful thinking. I don't think that's going to happen. But if it does, yes, it's good for the industry. But, one of the announcements on the corporate guarantee, which was made was that if full input credit is allowed, then they are planning to exempt the GST on it. My thoughts on this is that, something should have been done for sectors which are not within the GST ambit, especially power sector. And Saurabh is an expert in that sector, I can say from my past interactions with him. Power sector is one of the largest sectors which uses corporate guarantee mechanism because, there are a lot of debt financing, etc., which happens. And unfortunately, they are outside the GST ambit. So for them, really, there is no benefit of exemption from corporate guarantee, which I think somewhere down the line, the council should think about as well.
All right. This perhaps also today, Mr. Jain, was a precursor for what we could expect. So just weigh in on what your expectation from the next council meeting is going to be now.
I see that expectation for the next council meeting mainly will be rate restructuring. See, the buoyancy in tax collections in the last 1 year is quite substantial. And this was the promise made in the 2017, going down the line, in case the rate of collection goes improved, then the rate will be revisited. And I believe there is a consensus among the at least industry and the consumer itself that this rate structure is complex. Now we have the 5 tax rate structure, which is complex. If not more, at least one rate structure can be brought down. 12 and 18, there can be a compromise. It can be brought down 15%. Some of the item can go up from 12 to 15, and some item can be brought out from 18 to 15. And the second part, which I think the finance minister didn't touch, and I believe none of the people in the press asked the question about the cess, which we call sin tax, which was there. And now there is, I think, a lot of money has been collected. The loan which have been taken, we have been repaid. And so still there will be 75,000 crore rupees of surplus. How that is going to be in the future, whether the cess will get abolished or the cess will continue, and if the cess will continue, in what form and how it is going to be divided among the state. I think that will be the agenda in the next meeting, should be there on that part of the agenda of that. And definitely the other point which you touched upon was inverted rate structure. That will also be a subject matter. And then taxation on this gaming, horse trading, etc. All, I think these items which were supposed to be taken up in today's meeting will be in the next meeting, I believe.
Right. Mr. Agarwal, is that your thought as well, that perhaps, all of that we were thinking today will be taken up, will make it to the list of the next meeting? What are your expectations?
So I think we'll have to wait to see the fine print of the council meeting. I believe that many of things would have taken. At least 3 or 4 items which I would want to see in the next council meeting is around the invoice locking facility within GSTN system to avail the input tax credit. Something around dispute resolution, because it requires a multi-pronged attack, which is in the form of an amnesty scheme, National Authority for Advanced Rulings, and full appointment of GSTAT. And again, an important element around the sectoral committees and standardized compliance manuals is what I look forward into the next council meeting, because these are things which will look into overall transforming the GST further and moving towards GST 3.0.
Right. Mr. Bose, any final thoughts on what we should be expecting in the next meeting?
Well, I mean, yes, there are these agenda items which were not discussed this time, but we'll also have to wait for the budget to, come up, which is, again, I think the next 10, 12 days, it's going to be there. So I guess we'll have to wait for a bit to see what is the final agenda. But yes, definitely, I think online gaming would be taken up. Since there was a commitment made that they'll review the structure and the evaluation, etc., after 6 months, which has unfortunately not been done till now. So I guess that is one thing definitely that will be there on the agenda in the next GST Council. But others, yes, let's see how the budget goes and we'll see where we are then.
So all our eyes now trained on August. That's when we're expecting that next meeting to take place. All 3 of you gentlemen, thank you very much for joining us on this special broadcast.
Pleasure. Thank you so much.
Thank you.
All right, let's go across to our correspondents now. Rishabh and Janani are joining us both. Rishabh, first to you. Obviously, there was a lot of expectation from this meeting. Not too many things were taken up, but it does seem to be a good attempt at least, housekeeping perhaps, easing the burden on the taxpayer. What is the sense that you got?
That's right. There was a lot of focus on easing taxpayer burden. There was also a lot of issues that matters of urgency that were taken up. We also saw there was waiving of interest and penalties under various sections of the GST Act. So cases that did not involve fraud or suppression or identity suppression, a lot of interest was waived off. So this is all obviously aimed at reducing the sort of interest burden that is there on taxpayers. We also saw that in terms of companies that look to file appeals, there is a reduction in the pre-deposit that is also required. So some sort of ease and some sort of relief there for companies as well. So the Finance Minister and the GST Council both very forward-looking in that sense in terms of how to sort of ease the burden on taxpayers, be it companies or just individuals.
Right, Janani, now you did manage to speak to some of those state finance ministers. They've got a huge list, really. The Andhra Pradesh minister spoke to you, the Kerala minister spoke to you. What is the large sense that you got?
That's right, Nupur. We got to know that a lot of the ministers have also put forth their pre-budget requests. Now, in the case of Andhra Pradesh, which remember is a key contributor to the NDA government that is currently in power. Now, capital construction, while a special package per se was not the word that was used, but some sort of financial assistance, much like something we've reported earlier this month, would likely be there for the construction of Amaravati. And in fact, they've also sought assistance for state-specific projects. Now, Kerala, on the other hand, has sought a sort of extension of the borrowing ceiling. Now, remember, liquidity stress has been an issue that Kerala has been beleaguered with for quite some time now. The matter has been taken to the Supreme Court. We also know that discussions were happening between the Finance Secretary's office and the Kerala government. So they have sought an increase of 0.5%, and also for power reforms they need an extra borrowing ceiling, is what they say. But of course, quickly switching back to today's GST Council meeting, like our previous speaker spoke, all eyes peeled on the August meeting that will happen post-budget, and of course, the finance minister issuing a appeal sort of through the media to the viewers that all assessees are not being scrutinized. Only 1.96%, totaling up to about 1,14,000 assessees out of a larger pool are only being assessed. So she wanted to alleviate any sort of feeling that a lot of people are being questioned and pulled into demand notices. But while we are on this subject, I think both of us would like to share some of the key legal changes that also came about. Now, a maximum pre-deposit for the filing of an appeal before the appellate tribunal has been reduced from 20 crore to 20 crore from 25 crore for both CGST and SGST respectively. And while we haven't gotten a date of operationalization for the appellate tribunal, that's yet to happen. The Revenue Secretary will have a separate meeting. So this is something we're still waiting. And another interesting thing is now taxpayers can correct a previously filed form through the new form GSTR 1A. And of course, a very interesting announcement is a pilot project that has come to fruition on the biometric Aadhaar-based, registration. Pilots had happened in the leadership of Vivek Jory, who was the former CBIC chairman, and it had happened in Puducherry and Gujarat, and now it has been, agreed to be implemented pan-India. Starting now, the finance minister has said, so it will happen in a phased manner. So what a new GST registrants can expect is a biometric Aadhaar-based verification that will happen, which they expect will actually weed out a lot of the faulty ITC claims that have been happening, which has been quite a big problem for the industry. Rishabh, could you quickly take us through perhaps some of the rate changes?
Right. So a bunch of rate changes that we saw. The council recommended a uniform rate of 12% for all milk cans. Now, this is irrespective of whether it's a tin or aluminium or whatever it is. It's irrespective of the material. We also saw 12% on all carton boxes of corrugated paper, non-corrugated paper. This is all aimed at apple growers in Himachal Pradesh and Jammu and Kashmir. The FM said that this has been a long-standing demand of this sort of MSME or SME sector that has emerged. All types of sprinklers, including firewater sprinklers, will be under 12%. Solar cookers also 12%. A very, very important one, railways. Sale of platform tickets, intra-railway services, cloak rooms, waiting rooms are all exempted from GST. And a very, very interesting one was the hostel accommodation one. Hostel accommodation within campuses was already exempted, but that has been now taken ahead, and hostels outside of educational institutions are also exempted now from GST.
Absolutely. Rishabh and Janani, of course, several of those moves essentially for the taxpayer coming through, but not a lot in terms of what was expected. Both of you, thank you very much for joining us on the broadcast. Well, with that, that's a wrap on our special broadcast. Thank you very much for joining in, but stay tuned to NDTV Profit for more.
Guests, and good evening, Vikram.
Very, very good evening. Very excited. 15 years of ET now. It's a momentous occasion, no doubt. And Avan has been here all these 15 years, haven't you?
I feel like an absolute relic. There's so many of us here who have been a part of ET Now for so many years. And yes, indeed, this is a wonderful milestone.
It is something that we are looking forward to celebrate through a series of dialogues that are going to unfold this evening. We are looking forward to you all settling down. RBI Governor Shaktikanta Das with us, our chief guest for the day. It's been absolutely thrilling, really, to be a part of this journey here at ET Now. It's an incredible milestone that we have been able to achieve over the last 15 years. And now we've played this pivotal role, Aban, a pivotal role in ensuring that financial knowledge, that opportunities to grow, to reach every corner of the country is something that ET Now has been able to build on over these last 15 years. And we believe in staying ahead of the curve, to spot the trends, to find out where the stock market is moving and track that universe very, very closely. Through our comprehensive coverage, through our astute programming, we've been able to do all of this. We've empowered millions of our viewers to make informed financial decisions, haven't we?
Absolutely, and a lot of those guests who help us make those informed financial decisions have chosen to grace us with their presence today. So we thank you all, and we're very excited to have you here today. In fact, as you all know, that ET Now is India's premier business and financial news channel. We are not just committed to trend spotting and demystifying financial concepts, but we've also been very instrumental in contributing to the nationwide goal of economic prosperity, and that aligns with our mission to help our viewers, and that, of course, is our tagline, Rise with India.
That's exactly what we seem to have done over these last 15 years, because we came in at a momentous time as well. Just after the financial crisis, 2009, the world was just about reviving, and what a period we had. And we've taken this grand commemorative occasion today, an opportunity to create ET Now Leadership Dialogues, like we are calling it. It's an enlightening platform that seeks to congregate industry leaders and stalwarts. Some of them are right here in this audience, and we bring you the most thought-provoking discussions, insights from the world of business and finance.
And what an exciting time it is for us, Vikram. We've surpassed all the predictions when it comes to the progressive growth that we've witnessed in the country in the last decade. Yes, we have had our fair share of socio-political upheavals, but we've thrived as a nation, we've thrived as an economy to really amass international attention. And at this halfway mark to the next decade, it is time to set our sights on India at 2030. And that is the theme of our first ever edition of the ET Now Leadership Dialogues. Ladies and gentlemen, that is the theme for today, and I request you all to take a look at the screen as we have a short video for you.
Welcome to the ET Now Leadership Dialogues 2024, where we raise a toast to 15 years of empowering Indians. For over a decade and a half, ET Now has been more than just a channel. We have been a beacon of hope, a guide through the complex maze of financial markets, and a storyteller of India's remarkable transformation.
भारत $5 ट्रिलियन की इकोनॉमी के लक्ष्य को प्राप्त करे.
From the heart of bustling metros to the serenity of the smallest towns, we have bridged the gap, bringing financial wisdom to every doorstep.
Nifty is at a record high, so it's a brand new print on the Nifty.
The Nifty traded into uncharted territory. We surpassed 9,400 with conviction.
Celebrating peak 50K for the Sensex.
Fresh new high as far as the index is concerned.
And through every beat, every stride, ET Now has been there. Through groundbreaking journalism and insightful programming, we have fostered financial literacy, empowered investors, and sparked conversations that shape the economic landscape of our nation. We have connected you with the most influential voices, policymakers, market veterans, and visionary leaders. We have brought you the insights to make informed decisions and the inspiration to dream bigger. Today at the ET Now Leadership Dialogues 2024, we gather to celebrate our shared journey and envision the future. Join us as we explore visionary pathways to grow, Hear from the esteemed RBI Governor Shaktikanta Das and engage with industry stalwarts who have driven India's financial and industrial success. ET Now, empowering India for 15 years. Let's rise together.
Thank you for the applause. We are indeed all set to rise even further with India. The opportunities are huge, and we are here to delve into getting some of those insights about the path ahead. And here we are, as we are looking into the Leadership Dialogues 2024. We are going to engage with eminent industry leaders, policy makers, market veterans, all of them, many of them in attendance today. But before we do that, we would like to thank our sponsors.
Absolutely. The ET Now Leadership Dialogues 2024 is presented by Capri Loans and co-presented by Jana Small Finance Bank. And we also request all of you in the audience, please do share your thoughts, your comments, your suggestions. We're active on social media and we hope you are too. It's the hashtag ET Now Leadership Dialogues. That's hashtag ET Now Leadership Dialogues. And with that, Vikram, why don't we begin the formal proceedings?
The proceedings. To formally welcome this August gathering this evening, we would like to invite Executive Director and Group CEO Non-Publishing, The Times Group, Mr. N. Subramanian, to deliver the opening address. Mr. Subramanian, do join us.
Ladies and gentlemen, a big round of applause.
Respected RBI Governor Shri Shaktikanta Das, Mr. Dinesh Kara, Mr. Ashish Kumar Chauhan, Mr. Utpal Seth, Mr. Manish Chokani, Mr. Puneet Chatwal, Mr. Sunil D'Souza, colleagues and my dear friends. It's an absolute honor to welcome you all to the ET Now Leadership Dialogues 2024 as we celebrate a remarkable milestone, the 15th anniversary of ET Now. The occasion is not just a celebration of a channel, but a testament to the vision, dedication, and pursuit of excellence that the Times Network stands for. ET Now stands on three pillars: integrity, innovation, and intelligence. And for over a decade and a half, ET Now has been at the forefront of the country's economic narrative, providing unmatched insights, comprehensive coverage, and a platform for dialogues that help drive forward the task of nation building. In just over a decade, India has transformed from being part of the so-called Fragile Five to becoming the fifth largest economy of the world. The country is today the fastest growing major economy in the world, with a GDP of around $4 trillion. Over the past 15 years, following every episode of global crisis, India has always emerged stronger. Our country is today on the cusp of a new phase, an era characterized by remarkable growth, innovation, and opportunities. While we have our share of problems, we also have the capability and determination to resolve these problems. Our nation's economic and financial landscape is evolving rapidly, and the potential for future growth is tremendous. Let us look at the Indian stock markets. In the last 10 years, we have seen a remarkable rise in the number of retail investors. The number of demat accounts has surged from 2.3 crores to over 15 crores. Monthly SIP inflows have grown from 3,500 crores to over 21,000 crores. As a nation, we have every reason to believe that we will become a $10 trillion US economy, $10 trillion US dollar economy by the turn of this century. By the turn of this decade, sorry. Our Prime Minister Shri Narendra Modi ji's vision for a fully developed India emphasizes continued reforms to achieve this goal. These reforms include infrastructure development through significant investments in projects to boost connectivity and economic activity, Digital India to enhance efficiency and transparency, skill development to unleash the potential of our demographic dividend, Make in India to reduce dependency on imports and create more jobs, and green energy to drive long-term environmental sustainability in the country. We are extremely honored to have RBI Governor Shri Shaktikanta Das with us today. His tenure as RBI Governor has been marked by stability, implementation of critical reforms, and world-leading innovation in digital payments. He spearheaded the Central Bank Digital Currency Initiative and linked UPI with Singapore's Pay Now. Recognizing his leadership, and contributions to financial stability and innovations, Governor Das was awarded the Governor of the Year at the Global Central Banking Awards 2023. Also last week, the RBI received the Risk Manager of the Year award for improving risk culture and awareness. As the leading media company, Times Network has always taken pride in being more than just a chronicler of events. We are active participants in the narrative of India's growth. ET Now has been a beacon of financial literacy and economic insight, empowering millions of Indians to take informed financial decisions and contributing to the broader goal of nationwide economic prosperity. Looking ahead, we are committed to not just tracking the country's growth, but also actively shaping the narrative. Throughout our in-depth analysis, expert interviews, and groundbreaking reports, we aim to provide our audience with a clear vision of the future. The essence of financial journalism lies in its ability to provide clarity despite the chaos of market fluctuations and economic trends. We will continue to highlight opportunities, dissect the challenges, and celebrate successes that shape India's journey of growing into a stronger nation economically and geopolitically. As we celebrate this significant milestone, let us reaffirm our utmost commitment towards excellence and our dedication towards driving India's growth story. The future is bright and the possibilities are endless. Together, let us rise to new heights and make the most of the opportunities that are before us. Thank you.
Thank you so much. Yes, absolutely. Mr. Subramanian, thank you so much. Those very astute words. And yes, the path is very clear for growth, isn't it, Avan? Just like Mr. Subramanian pointed out.
Absolutely. The path of growth looking very promising. And I just request you, Mr. Subramanian, to please stay on stage with us. We would like to now welcome our chief guest and present him with a small token of our appreciation.
Yes, indeed. In his capacity as the governor of the RBI, Mr. Das has held the key to comprehending India's tremendous growth story. His stewardship has regulated and secured the monetary policy to institute this steadfast, this robust economy that we see thriving now.
Absolutely. A small token of our appreciation. In fact, at the World Economic Forum in Davos just this year, he ascertained that there is a lot of international confidence in India, a lot of strong technology that's been built around India, and such is the high resolve of the Indian economy.
Yes, indeed. Now, to speak to us further about the way ahead, Mr. Shaktikanta Das, may we request you to please address us.
Mr. Subramanian, members of the entire team ET Now, distinguished panelists and other experts who would be taking part in various discussions during the course of rest of the day, members of the audience, ladies and gentlemen. I'm extremely delighted to be here at this event with ET Now, which I think incidentally is the second event of ET Now that I am participating. The earlier one I had participated, if I recall correctly, was in December 2019. And much has happened after that. And here we are, and where ET Now completes its 15 years. So let me at the outset congratulate the entire team of ET Now for their journey over the last 15 years, which has been marked by several high points and extensive coverage of the Indian economy, the global economy, and analytical discussions and other interactions which they have participated. There was also a bit of a good news from the Reserve Bank of India, which was already mentioned by Sri Subramanian. Recently, the last week, the Reserve Bank received the Risk Manager of the Year 2024 award from Central Banking London. And over the years, particularly in the recent years, the steps that we have taken to build up internal risk management skills within RBI, to, the risk management within RBI, it's a true recognition of that, and the citation clearly recognizes that RBI has now reached a certain high point of all the leading international institutions, particularly the financial institutions and central banks. Now, this is my first public interaction after the monetary policy statement, which I made on 7th of this month. That's about 10 days from now. And so therefore the silent period is over. And I would like to take off from where we left in the monetary policy and try and provide a little bit of further elaboration on the rationale behind the various decisions that we have taken in this latest monetary policy of June. Much was said about the economic growth of India, the GDP growth of India. As you are all aware, last year, 23-24, when we started, the RBI's projection was 6.5% GDP growth for 23-24. The markets and the analysts were pitching a little bit lower, and we were considered as being on the optimistic side. But we continued our journey of optimism because there was enough basis to it, and then we increased it to 7%. The market also revised upwards. The analysts also recognized the trends which were building up, and soon, others also revised their GDP projections upwards. And when we said 7%, it was also perceived as optimistic. Then I think somewhere during the course of the year, earlier perhaps in January or February, I remember having said in a public forum that we will not be surprised if the GDP growth touches 8%. And indeed, it not only touched 8%, but has exceeded 8%. 8.2 is what has come out. If you look at the average of the last 3 years, the average is 8.3%. The average annual GDP growth over the last 3 years is 8.3%. For the current year also, that is 24-25, we have given a projection of 7.2%, and the earlier projection was 7%. Now, I don't want to get into too much of statistics because, statistics has its own, two sides to statistics. But let me say why we increase the growth. Why did we increase by 20 basis points? Now, that is because, number one, we see the growth momentum. We see a very strong momentum of economic activities, a strong momentum of growth. If you look at the last quarter, that is Q4 of 23-24, that is January to March this year, the momentum of economic activity is much stronger. In fact, it was perhaps the strongest momentum of the last year. And the growth in the last quarter itself was 7.6%. Although the implicit number behind NSO's number was 5.9%, but the momentum was so strong that it came at 7.6%, resulting in the high growth of last year. And that same strong momentum of economic activity has also continued into the first quarter of this year. April and May are over. We have in Reserve Bank, we have the data for it. June also, we are in the third week of June now. The data is also available with us. So we see the momentum is well sustained. And we are therefore quite sanguine and quite optimistic that the projection which we have given for the first quarter of this year, 7.3%, we are quite optimistic that it will indeed be 7.3%. And there is no reason why the momentum will slow down. That's the first point. So the momentum of economic activity continues to be strong. The second point, there are several other points. I will not go into the details, but the second point I would like to highlight is that rural demand, in the consumption side, rural demand which was lagging behind for considerable period of time since the COVID, and perhaps in the first half of last year also, has also beginning to improve and improve quite visibly. The rural demand, rural consumption has picked up. It has gone up. FMCG sales in the rural sector has also increased. The demand for NREGA labor has also gone down. The agricultural season also looks very optimistic because of the projections of above normal monsoon, southwest monsoon this year. So therefore, rural demand is something which is picking up, which was not there earlier. And all our analysis, all the trends which have come to us, it indicate that the rural demand will hold. And as the government capex starts unfolding, as the expenditure from the government side as well as from the private investment, they start picking up, I think rural demand this year will be well sustained. The third point is that the external sector, notwithstanding that the global growth is still below its historical average. In fact, from 2000 to 2019, the average annual global growth, the trend growth, GDP growth was about 3.8%. But the IMF has projected 3.2% for current year as well as 3.2% for next year. Now, notwithstanding the fact that the global growth is below the historical trend, but still 3.2% means that the external sector, the external demand will also continue to be strong. And that would mean that it will give a lot of support to our exports, especially the services exports. In fact, services exports of India are doing very well, especially, IT services and other services. It's no more confined to just IT, but it's now business services, it is accountancy, it is legal, it is so many other activities in the, in the realm of services where India is, where things are looking up so far as the external demand is concerned for Indian services sector. So therefore, it's the momentum of economic activity, number one. Number two, rural demand is picking up. Number three, the external sector also offers a lot of promise for the Indian economy. Add to that the fact that the urban demand is also holding on, mainly supported by increased activity in the services sector. Add to that the good monsoon which is expected. Add to that the revival of investment which is also happening. Private investment. When I'm saying private investment, I'm specifically referring, when I'm saying investment, I'm specifically referring to private investment. Government capex has been very strong in the last 2 to 3 years. But private investment is now picking up. If you look at the corporate results which have come out for the last year, you will find that, the size and the numbers relating to fixed assets have gone up. Earlier, corporates, because of their deleveraged balance sheets, the corporates were holding a lot of cash, a lot of surplus cash they were holding. But now it has moved into fixed assets. So if you look at the balance sheets of corporates, the size of the fixed assets have also grown. And they have shown very good growth. Now that is one evidence that investment, private investment is taking place. You will hear several bankers subsequently during today. They will highlight perhaps even better the demand that the banks are experiencing from the corporate sector. And there is clear visibility of investment happening in certain key sectors of the economy, mainly related to infrastructure activities, whether it is steel or cement and other areas like electronics, chemicals and fertilizers, pharmaceuticals, oil and gas. So all these sectors, basically primarily infrastructure sectors and also electronics and certain capital goods. Capital goods imports have also, electronic goods and capital good imports are also looking up, which means that that is going into more of productive activity. So because taking all these things into account, we have therefore increased our growth rate to 7.2%. Now turning to inflation, inflation is moderating, but at a very slow pace. We are fairly confident that the downward journey of inflation will continue. We are pretty optimistic that the inflation will continue to moderate, but the pace of moderation seems to be very, very slow. And it is so worldwide. If you look at the numbers, even in advanced economies, the pace of disinflation is very slow. In the advanced economies also, we are coming across instances where inflation has again mildly gone up, and or rather it has kept higher than what was estimated. So therefore, this last mile of the disinflation journey is proving to be very sticky, arduous, and very slow. That requires a lot of patience, and we need to be watchful. But we are quite confident about inflation moderating to 4%. How long it will take? We have given out a path in our monetary policy statement and also in the monetary policy report, which we come out every 6 months. So for the time being, we are sticking to that because there are lots of uncertainties also. And the uncertainties come from the fact that the challenges of food inflation still remain. Food inflation continues to be high. In fact, in the last 6 to 7 months, the average food inflation is about 8%. Core inflation has substantially moderated and has reached a historical low of 3%. That was the number for May. In May, the core inflation was 3%, whereas food inflation was 7.9%. So the disinflation process is getting a lot of resistance from the food inflation remaining stubborn and remaining very high, and that's primarily because of supply side factors which are affected by the weather conditions. The extreme heat last summer has affected the pulses cultivation. It has affected the vegetable production. So therefore, there are challenges in the journey for disinflation, and we need to be very mindful of that. International metal prices have also started going up, of late. So taking into all these factors, we have given our projection that current year's average inflation will be 4.5%. Inflation will continue. These are our projections. Inflation will continue to moderate, but will continue at a slow pace. So therefore, at the current juncture, we thought it's most appropriate to avoid any kind of adventurism and stick to the path of inflation that we had earlier laid out. And as a central bank, we will remain very watchful and determine our actions as we go forward. Having said that, let me say that the growth inflation dynamics in India is very well placed. There is enough room, considering the fact that inflation is moderating, there is enough room for us to sort of focus clearly on inflation. There is also enough room for economic growth to pick up. Whatever moderation in inflation we have achieved, thanks to the 250 basis points rate cut, and thanks to the actively disinflationary stance that we have taken since the beginning of 2022-23, that is since April 2022, immediately after the commencement of the war in Ukraine, and the monetary tightening that we did, which was mostly done upfront, which was front-loaded. Because of that, the core inflation has come down, and we have been able to achieve that without sacrifice in growth. So therefore, I am very sort of happy to share with you that the balance we are expected to maintain between inflation and growth, which is enshrined into the relevant provision in the Reserve Bank of India Act, when it talks about monetary policy framework, we have adhered to that balance, which is the expectation of the lawmakers as embodied in the Reserve Bank of India Act. Finally, before I conclude, let me say that not only the domestic sector, the external sector, I mentioned about export demand and other potential, but in the external sector, two important things are happening. Number one, our current account deficit has remained very low. In fact, compared to very high numbers in the past years, let me not go into the details of the numbers, but in the first 3 quarters of 23-24, that means from April 23 to December 23, the current account deficit was 1.2%. Our teams are working on the fourth quarter numbers. The fourth quarter numbers look to be even lower. And when you look at the annual current account deficit number, I will not be surprised next week when we publish the current account deficit numbers for this year. It could be even lower than 1%. So the current account deficit looks very promising, and the reserves have reached, you would have seen the latest number, the reserves have reached $655.8 billion US dollars. The forex reserves have reached $655.8 billion. So that sort of gives a lot of confidence to international investors about the stability of Indian markets. And we will continue to build up reserves opportunistically whenever there is an opportunity. I have said it earlier also, it's a matter of stated policy. We don't shy away from that. We will continue to build up our reserves opportunistically whenever there is an opportunity, whenever the market allows it, so that a strong reserves also does help us to maintain the volatility in the markets and also give that confidence to international investors that India will be able to fulfill its external payment obligations. Finally, let me conclude by saying that as a central bank, you are aware the Reserve Bank has got a wide range of functions. It's what they call a full-service central bank. Few central banks in the world have that kind of range of activities, starting from payment systems to financial inclusion, to monetary policy, to regulation of banking, supervision of banking and non-banking sector. So a whole range of activities we have, and our primary responsibility is to ensure financial stability. And as an institution, Reserve Bank remains committed to maintain financial stability in the country and remain future ready for the growing economy that India is and which India promises to be also in the future. We have spelt out some action plan as a part of the agenda for RBI at 100, and which was released along with the monetary policy statement on 7th of June. So with this, let me conclude, and thank you very much for your patient hearing. Thank you.
When the words come from Governor Das, the confidence, the kind of reassurance that we get is beyond measure, and it's great to continue this conversation with Editor-in-Chief of ET Now and ET Now Swadesh, Nikunj Dalmia. Let's have more leadership conversations going. Over to you, Nikunj.
Good evening, everyone, and thank you for being part of ET Now Dialogues. 15 years, well, it means a lot, and ET Now as a brand would have not reached where it is without some of you really supporting us, so thank you very much. Governor, all I can say, sir, is a big thank you on behalf of everyone in this room, those who are watching the telecast live, and those who would be watching the show later on. It is an absolute honor and a pleasure for us to have you here. Governor, your opening remarks in a sense really set the tone. The economy is growing, inflation is coming under control. Under your leadership, Reserve Bank of India has ensured that the financial stability remains strong and robust, and forex reserves are strong. So can I say that this is the best macro setup you've seen, at least in your tenure?
Yeah, I would think so. It's, the mix, the confluence of various factors are very robust. But having said that, I would like to also qualify it by saying that should not lead us into any kind of complacency or overconfidence. Markets keep changing, international developments keep happening, there could be surprises. So one has to be very alert and agile at all times and try to sort of watch the developments in every corner of, our own economy, and also what's happening all around. Because things can sort of turn, it takes very little time for the cycle to change. So one needs to be very alert and agile, no room for complacency, but yes, at the same time, I think the current confluence of factors are strongly favorable to India's growth and stability.
Governor, your FY24 estimates, which Reserve Bank of India initially started with, the final number was much above than what your initial estimates were. So for FY25 also, the initial start number is 7.2 to be specific. Are you leaving a lot of headroom for a positive surprise?
There can be positive surprises. I don't rule it out. But I think, we give a number when we are totally convinced about it. And our approach is not to sort of gamble by giving a higher number. our overall approach as a central bank is always very conservative in the sense that when we are absolutely sure about a particular number, we give it. Now we are certain about 7.2%. Of course, yes, there are downsides emanating from possible downside risks, not downsides, but downside risks emanating from geopolitical conflicts, accentuating further, or, the trade and the capital flow fragmentations becoming more accentuated. So there are downside risks emanating from the, from the external sector. But within that, as I explained a little earlier in my address, in my opening remarks, I think the momentum continues to be strong. So we therefore thought that 7.2% is very much achievable. Even in the first quarter, let me say that 7.3%, I said it should be possible. We expect it very much to materialize, although our internal nowcasting tells me a slightly higher number. But I'm not saying that in public. I would rather wait for the number to come and then talk about it.
So, Governor, when the Reserve Bank of India governor is indicating something, he's thought through it. And now I'm just putting the dots here, which is then your earlier forecast, while you were describing the forecast, your choice of words was cautiously optimistic. The word cautiously optimistic is out. The word confidence has made a comeback.
Yeah, I think we are getting used to, a better forecasting scenario. And I hope it sustains, because whether in matters of inflation, again touch wood, whether in matters of inflation or growth forecast, you would have seen in the last few years, by and large, the numbers are coming almost in line with our projections. So our forecasting models, our overall, methods, we have brought about a lot of improvements. So that seems to be working. And we are quite confident about the 7.2 for the current year.
Governor, last couple of years, we've had a patchy monsoon. The economy has managed to grow despite a patchy monsoon. Looks like we are in for a normal monsoon this year. So yeah, assumptions of your GDP growth, what kind of monsoon factor it is accounting in for?
No, if you see the monetary policy resolution, I don't know whether we mentioned, I think we did mention that we assume always a normal monsoon. Because monsoon, again, the uncertainty always persists. Even this year also, after setting in a bit early, for the last 15-20 days, monsoon has slightly slowed down. And currently there is extremely severe heat conditions prevailing in northern states. But the monsoon will revive according to the IMD. But for the projections, for our estimate of GDP growth, and in all respects in monetary policy, we have assumed a normal monsoon.
Governor, this is the first time we are speaking to you in a public forum. So probably from a regulator standpoint, the continuity of the government, what does that mean for a regulator?
You see, for us, it is the government. There is always a government. Irrespective of which party forms the government, there is always a government. So as a central bank, and for every citizen in the country, there is always a government. So I'll leave it at that.
Sir, everybody expects you to leave it that. Everybody expects you to leave it that only.
So
not
it
say
is on
anything beyond
expected
that.
lines, no? So I have I have played the shot which you expected.
So, Governor, since we are talking about shots, let's look at the pitch report. Global conditions are stable. If one looks at the weather conditions locally also are getting better. So is the stage now getting ready for Reserve Bank of India to do the obvious, which is you've stated that you want to do the obvious, change the stance?
This is one point which we have explained quite a lot in the monetary policy statement. Now, you see, we are maintaining the growth inflation balance. And in that growth inflation balance, the interest rates, the repo rate is 6.5%. And it seems to be working because growth continues to remain robust. But inflation is moderating very, very slowly. So if you are expecting a faster moderation of inflation, then we have to take much more drastic measures. in terms of stance, in terms of rate, we may, we'll have to take a much more drastic measure if we want inflation to be brought down. But then we have to also weigh what would be the growth sacrifice that we would be making for the economy. In fact, if you recall, towards the end of 2021 and early 2022, there was all-round clamor as to why the Reserve Bank is not increasing the rates. Before March of 2022, there was a considerable body of opinion outside saying that the Reserve Bank was falling behind the curve. And that view seemed to be gaining traction. But we were very single-minded that we have taken the right decision, and at that point of time, towards the end of financial year 21-22, that is, let's say, from about October to, or rather from December 22 to December 21 to just in the 4-5 months preceding the Ukraine war, we wanted growth to revive. We wanted clear evidence that the growth has revived. So therefore, we refrained from increasing the rates or tightening the stance. Because our job is to ensure a proper, appropriate balancing between growth and inflation. At this point of time, there is again a clamor that, one should change the stance. But we want clear evidence that inflation should moderate. And moderate, we need more evidence that inflation should moderate and perhaps a little faster. As I explained, core inflation has come down, but the biggest uncertainty is food inflation. The average food inflation has been 8% in the last 6 to 7 months. And that is slowing down the disinflation of the, the headline numbers. Headline still remains at 4.75 as per the latest number. And then in the second quarter, it is likely to go down to 3.8. But again, it will go up to 4.5, 4.6. So you are within striking distance of 5%. And if there are a series of weather events or something goes wrong on the weather front, the vegetable prices and other prices of the key vegetables, the prices may go up. The food inflation again may go up. International food prices, I talked about international metal prices going up. In fact, the global food price index has also started going up. So therefore, it could even touch 5%. So therefore, it will be too premature to talk in terms of changing the stance. I think I used the word saying that any form of adventurism should be shunned. At this point of time, we should avoid any form of adventurism. It's better to stay the course and be watchful and take the step as play ball by ball.
So in your terminology, the inflation elephant has gone for a walk. It's too early to assume that it's gone in hibernation.
You see, the elephant is definitely going towards the forest. Okay. No doubt on that. But it's taking its own time. So we have to be cautious and watchful.
Okay. Governor, the dividend from RBI, 2 lakh crore, is it in sync with Reserve Bank of India's balance sheet, which is getting expanded, Governor?
You see, the balance sheet size obviously is growing by about 10% or so annually. But this year, you look at the, the annual accounts, they have been already published. It's there in our annual report. The annual statement of accounts have already been published. And it's mainly the, our incomes from foreign assets have gone up. Significantly, the income from foreign assets have gone up. That is mainly decided by the fact that all the advanced countries or all the countries where we have deployed our forex reserves by investing in their securities and government securities and treasury bills, the interest rates have gone up there. So naturally, in all our investments, we are getting, we rotate our investments also quite frequently. So naturally, we are, the income from foreign assets have gone up significantly, and it is determined, it's just a arithmetical number that we have to arrive at following the principles laid down by the, the Committee on Economic Capital Framework, the committee, the Bimal Jalan Committee. According to that recommendation, it is mainly out of, I would say, the foreign assets income.
Governor, Reserve Bank of India's primary goal is to maintain financial stability. But I'd like to draw your attention to the financial markets. The financial market cap right now is at 5 trillion. The real economy is at 4 trillion, which means the financial economy is now higher than the real economy. What do you make of this big expansion in the financial economy? As a regulator, we want to hear your thoughts.
No, you cannot sort of draw a conclusion from these numbers, from the headline numbers of nominal GDP and the financial market. You cannot draw a conclusion. There are much more to it. There are much more nuances to it. But all the parameters and indicators of our economic, of our Indian economy and our financial sector, they at the moment look very stable. What you are perhaps implying is that the question that is some part of the market or some segment of the market, is it getting overheated? So that is, I think, to put it, plainly, I think that is the question which you are asking. I think SEBI is engaged with that. So let me not, intrude into SEBI's territory and start talking about the stock markets. I think SEBI is fully seized of what's happening in the markets, and we have our regular interactions with the SEBI as a part of the financial stability and development, FSDC, the Financial Stability and Development Council. We have also a subcommittee which is chaired by the governor. The chairperson SEBI is a member of that. Under the aegis of that, we have an early warning group which meets from time to time and discuss everything that's happening in the financial markets. And if there is anything which is of discomfort, the early warning group addresses that and brings it to our markets, which may not necessarily fall in our domain. We share our thoughts with the SEBI.
What about the activity or retail frenzy in the futures and the options market? Given that futures and the options market indirectly could have impact on retail balance sheets, are you monitoring that?
Yeah, the early warning group is monitoring that. SEBI and the Reserve Bank together, we are monitoring that. In fact, currently the options and futures, the volumes are pretty large. It's, I think you are probably referring to that. It's perhaps larger than the nominal GDP of the country. So we have discussed these matters with SEBI. SEBI, I think, has taken a few measures, and they are examining it, and I think they will deal with it.
In the past, Reserve Bank of India has taken proactive measures when they thought that there was a bubble in the real estate sector. The economy is growing and the real estate sector is also growing. What are your thoughts there in terms of the expansion which is happening in the real estate sector? This is something Reserve Bank of India in the past has acted on.
You see, we are watching the developments in all segments of the credit market. Last year in November, we took certain action against unsecured loans. Not against unsecured loans, but in that particular sector. Unsecured loans, then things like bank lending to NBFCs. So wherever we saw some signs of a possible stress coming, in fact, at that point of time when we took the measures, there was nothing happening really, there was nothing alarming. But our conclusion was that if we leave it as it is, if we leave it unattended, or if we leave it as it is, then it could have led to a possible crisis at a future date. So we acted preemptively. And you would have seen that, in fact, the numbers speak for themselves. The retail lending, the unsecured retail lending, the other personal loans, what they call it in banking terminology, or the credit card outstandings, or for that matter, the bank lending to NBFCs, they have all moderated. They have all moderated, and we wanted a certain level of due diligence and discipline to be brought into the system, and that has been brought in. So we are watching all these segments of even the real estate sector, including housing. We are monitoring it. The numbers at times may look very high because, you see, SDFC merger took place last year. So that was not a part of the banking sector assets. That was a part of the NBFC. It was a housing finance institution. The SDFC was a housing finance institution, so that got merged with the SDFC bank. So therefore, because of the impact of the merger, the growth in the, what you call the real estate sector or housing sector may look high. But if you net it out, net of the impact of SDFC merger, the growth is within, nothing to worry about. But we are monitoring it nonetheless. And a major difference between what is happening in the, now in the real estate or the housing sector in particular, and the position which prevailed, let us say, more than about 10 years ago, is that now you have a RERA. So the RERA is now regulating particularly the housing sector. So the kind of asset bubble which we saw earlier in the housing sector, the paradigm has changed. And from Reserve Bank, we are monitoring it very, very closely, very, very intensively. And at the moment, it is all right. If at some point of time, some action becomes necessary, not just in the real estate sector, but any other sector, the Reserve Bank will definitely act proactively.
In your keynote address, Governor, you mentioned that you would continue to buffer up the Forex Reserve. The Forex Reserve of India north of $600 billion. Growth is strong. CAD is coming under control. So is there a threshold beyond which you would say that you could order adequate Forex reserves?
No, we don't have any such particular number in mind. India is a growing economy, and some people like to see the Forex reserves as a percentage of GDP. I mean, it cannot be looked at in that way, because when your GDP is growing, naturally your export earning by many companies are also going up. Companies are also taking care of their own Forex management. We don't have any specific number that this will be our Forex reserves and then stop, because the economy is growing. Financial activities are growing. And we would like our Forex reserves to become even stronger. And today, I think India is, I think probably the fourth or the fifth, largest reserves that we have. I think it's the fourth or fifth largest reserves that any country, among the countries. So we would like to keep on building it.
Governor, the Reserve Bank of India gold reserve now are north of 800 tons. And according to RBI's balance sheet, the last year addition was about 27 tons. Progressively, would you be increasing the component of gold in the Forex Reserve? Because globally also there seems to be a tilt by central bankers away from treasury towards gold.
You see, the gold purchased by the Reserve Bank, in fact, had stopped for quite some time. In 2011, I think 200 tons were acquired from the IMF. It's all in public domain. I'm not revealing any secret, any state secret. I think 200 tons were acquired from the IMF in 2011. But after that, RBI was not acquiring the gold. Then in December 2018, some small quantity of gold was purchased. But after that, if you see annually, and it's all there in the half-yearly reports. So after that, if you see annually, we have been buying gold. That is because our priority is to diversify the deployment of our Forex reserves in more currencies and in different kind of assets, particularly gold. And if you look at the long-term price of gold, gold prices in the long run have always increased. They might have fallen in between, but in a long period average, if you see, the gold prices have invariably gone up. So therefore, gold is considered therefore as a kind of a permanent hedge that you can have against external uncertainties and challenges. So therefore, we have now, we do buy the gold, but we naturally, buy it whenever there is an opportune moment. And there is a high-level committee which decides the strategy of purchase of gold. Yes, building up gold reserves is a part of our reserve deployment, and we will continue with that. But it's not as if that we will go on mindlessly buying gold. We have to be also very mindful of the international prices. But approach is, yes, we need to sort of diversify the deployment of our Forex reserves, and gold is a part of that. So naturally, the gold purchases will continue.
Governor, the theme of today's evening is India 2030. We are in 2024. 6 years from now, if you're engaging in a similar conversation, a similar forum, what are the three big marquee changes which the regulator feels will happen in the Indian financial sector?
You see, 6 years from now, I'll be sitting somewhere there. So But on a more serious note, we have laid down the agenda for RBI at 100, which is a part of our, the monetary policy statement, which we made. When we celebrated our RBI, the 100th year of Reserve Bank on 1st of April, where the Prime Minister also, he addressed the entire gathering. After that, we have worked and we have come out with this agenda for RBI at 100. Reserve Bank as an institution needs to be future ready. And we have spelt out several steps, I think about 9 or 10 different areas where we have spelt out what kind of steps. This is not a, this is a dynamic document. It cannot be a static document because the world is changing and changing fast. So you cannot just decide your action plan for 10 years and just stick to that. You have to constantly update it and modify that. And modify meaning upgrade that from time to time. Supplement that as may be necessary. But yes, we would like Reserve Bank, as we have said in that document, we would like Reserve Bank to be a model central bank, especially for the global south. We would like Reserve Bank as a central bank which has consistently maintained financial stability and has ensured a conducive ecosystem for the overall economy to grow.
Governor, in our interaction in 2021, I'm just going to quote your remarks here. You said that the Indian fintech is like a Ferrari. What Indian financial sector needs is a small car. How do you see fintech now moving, given that Reserve Bank of India, they are not against innovation, but I guess the regulation part is coming back in fintech. That's the impression everyone has.
No, just a slight correction. I never said a small car. I didn't say that India is for a small car. No, we have bigger ambitions. We would like Ferraris. We would like other, modern varieties also to be on the road. All that I said is that you cannot have a very advanced Ferrari-like car and say that I will drive at my own sweet will. I will not follow any traffic rules. Even if you have a Ferrari, when you are driving on a road, there is a traffic and you have to follow the traffic rules. And as the regulator, it's our responsibility to ensure that there are appropriate traffic rules, there are appropriate regulatory guidelines which will have to be introduced. You cannot say that I have a great innovation and I can do anything that I wish in the market. Similar to, somebody having a very high-speed car driving at a reckless speed and in the process killing somebody else, some third party standing on the pavement. You cannot do that. There are elderly people on the road. There are children on the road. There are people walking in the pavement. There are cyclists. There are scooterists, there are auto rickshaws. So you are traveling in a road and the road is a public space. So you have to follow the traffic rules. But yes, you can have a big car, you can have a Ferrari, by all means have a Ferrari, by all means grow big, and you must grow big, but follow the rules of the game. That is our philosophy, and we would provide, our effort is to provide a set of rules of the game wherein the various fintech sector players, they have sufficient space to play, bring in innovation, create jobs, and provide necessary impetus to growth. That is very important. In fact, we have come out with we have now called for applications for recognition as a self-regulatory organization for the fintech sector in particular. We are going to call for applications for the, SRO, that is for, the self-regulatory organization for the NBFCs shortly. But we have already called for applications for having having an SRO for the fintech sector. And last year when I participated in the Global FinTech Festival, I think that was in September or October, I had said that by next GFF, which incidentally this year is in end of August, I had said that I would like to see one fintech SRO at least having taken shape. And from our side, we are working towards that. I hope and I'm quite optimistic that the fintech sector will also soon come together, form an SRO, make the application, get the recognition from the Reserve Bank and start working, because SRO is very important. It provides a kind of interface between us and the market and the players. They tell us what all developments are taking place in the market, what all new technologies are coming. We in turn sort of address their concerns, take their concerns and suggestions into account. So it's a kind of a platform which provides an interface. So therefore we are all for innovation, but we would like to have responsible innovation and innovation becoming fintechs to follow the rules of the game.
Governor, last 3 questions. I'll not extend my appointment beyond that. Again, a big picture question, which is that who do you think in the financial sector has the right to win? Big banks, innovative banks, who has the right to win in the financial sector in India?
I think that the market has to decide who has the right. You can't say who has the right to win, but that the market will decide. And that also the individual institutions, how they play, what kind of governance they have, what kind of management systems they have, it is their responsibility. As a regulator, we have no preference. We do not discriminate between a bank of, a bank of this type or a bank of that type. It's for the managements of individual banks to, do their best to have their own growth ambitions and take all necessary measures for fulfillment of their growth ambitions within, of course, the broad parameter of the regulatory guidelines. And our job is to provide a vibrant and a robust ecosystem where everybody grows.
Final 2 questions, Governor. Is it true that your day starts with Economic Times and it ends with ET Now?
My day starts with multiple newspapers. Now, whether it is Economic Times or some other paper, I think let's leave it at that. But yes, definitely Economic Times is one of those multiple papers. And during the day, the channel remains, some business channel is always on my, in the office on a silent mode, of course. But I keep shuffling the channels. And one of the channels is certainly ET Now.
Thank you, Governor. But that was not my last question. My last question, is everyone ready? No, so last question, Governor, to you is that if given an option or choice to continue as RBI Governor in the 3rd term, would you be ready to accept it?
Well, that's a very, very hypothetical question. And why sort of, I still have 6 months' time, so let's see.
If you hear in next 3 months, what would be your first answer? If you hear something, what would be your first answer from the government that, okay, they would like you to serve as the 3rd government? Are you inclined towards it?
You see, I always use the analogy of cricket. When you go out to bat, you don't go with a preset mind that I'm going to play this shot. You wait for the ball to come. When the ball, from the action of the bowler, you see some movement. You make an assessment that this is how he is going to bowl. But these days the bowlers are far too intelligent. They will show one action but bowl in the opposite direction. So you have to be watchful. The ball has to pitch. Then you have to see in which direction the ball is taking the turn. You have to see whether it's a bouncer, a yorker, or it's, what's the nature of the ball. And then you have to play your shot. So therefore, a batsman cannot decide what shot he is going to play before the ball has pitched or before, if it's a full toss, before it has pitched.
Ladies and gentlemen, if a pantheon of great central governors in the world is ever to be made, all I can say is that the RBI governors, Mr. Shaktikanta's name would be right up at the pedestal. From COVID crisis to managing the economy to ensuring that the Indian banking system remains robust, I guess all of us really are very grateful, thankful to the way Reserve Bank of India has really ensured that the financial stability of the system remains ensured. I would urge everyone to give him a standing ovation. He is someone who has really ensured that India goes through tough times, through peaks and troughs. Reserve Bank of India has ensured that the Indian financial system remains robust. Thank you, Governor.
Thank you so very much, Nikunj, for spearheading that conversation and lots of headlines. Mr. Das, appreciate all of those insights. Thank you so very much for sharing those with us. So a lot that was discussed that I'm sure we can absorb and that will be flashing on the channel as some of our top headlines this evening. The fact that the RBI governor himself saying that the current account deficit numbers look very promising, that the gap could actually be below 1% in Q4 of FY24 when the data comes out. He also, Vikram was talking about the GDP number likely to be on the higher side. Music to everyone's ears, I'm guessing.
Absolutely. The economy growing at the pace that it is growing in. Obviously, inflation is a worry, but it's also trending down. So perhaps the idea is to control inflation in a calibrated way, and that's exactly what is happening. Of course, this kind of dialogue is going to continue. We are going to have this interesting conversation next. The chairman of India's largest public sector bank, the State Bank of India, Dinesh Kumar Khara, is with us as well, and we are about to have that conversation too.
Yes, indeed. And we'll be talking about the focus of the Indian financial market, focusing on funding India's Viksit Bharat aspiration. And for this, ladies and gentlemen, please put your hands together as we welcome on stage the chairman of India's largest public sector bank, the State Bank of India, none other than Mr. Dinesh Kumar Khara. And taking forward that conversation yet again is Nikunj Dalmia, Editor-in-Chief of ET Now and ET Now Swadesh. Gentlemen, over to you. I request everyone in the audience as well to please come right back in, take your seats. This is a conversation that you don't want to miss.
Good evening, everyone. So, Khara Sahab, how much do you agree with the governor? How much do you disagree with the governor? We are not on air right now.
No, I think governor has been very, very analytical. And I would say that he has been reading the trends very well. So I tend to agree with him almost fully.
Mr. Chadwal just made a point that while governor's job is to ensure that the match is played with rules and regulation, the real wicket keeper of the economy is SBI. As India's largest PSU bank, what is your understanding of where growth is headed? What is your understanding of where the credit offtake and the retail balance sheet is headed? Can you give us the big picture?
Yeah, the way I look at it is, of course, what Governor mentioned in terms of the GDP growth rate. We tend to more or less agree, rather we have got little more optimistic growth trends, which we have in our own internal assessments. And based upon that, we are quite hopeful that we should be in a position to maintain our growth trajectory, which we have demonstrated even in the last year. So which means that around 15 to 16% kind of a growth. And keeping that in mind, the major change which we are observing that as compared to what we saw in the previous years, it used to be essentially retail growth which used to be leading the balance sheet growth. Now we have started seeing good trends even in SME space. And even for that matter, what Governor mentioned in terms of the private investment being seen on the ground, that is the reality, and that is the reason why we have a decent pipeline in terms of the corporate credit also. So I think the year which we see will witness growth, retail, corporate, SME, and even in, for that matter, agriculture sector also. So perhaps I would say that this is going to be one of the best possible year as far as the economic growth of the economy is concerned.
And you think the credit cycle of mid-teens or between 15 to 17% could last despite a high base effect for next 3 years at least?
Well, of course, I think the way things are emerging, I always say that the growth is a function of how the GDP or the macro will look like. And our expectation is that the macro growth should be somewhere in the range of 7.5 to about 8. And if at all that is the kind of a situation, I think around 14-15% kind of a growth should be a reality.
and you can grow without the stress of NPAs, because the hallmark for SBI in last 2 years has been strong growth, low NPAs, no capital raise. Will this template continue?
Well, of course, that is attributed to partly to the ecosystem which has taken roots in the economy, partly also to the responsible borrowing, and part of it is the effective control mechanism thanks to the structured, unstructured data which is available, which helps us in identifying the red flags in good time and initiate the recovery actions in good time. So I would say that it is overall the culmination of multiple factors which has led to this kind of a situation, and I don't see any kind of a let-up on these very important contributors for ensuring the quality of the loan book.
I'd like to draw your attention to the liability franchise. And there seems to be a war of liability. While State Bank of India so far has managed to protect its liability franchise, given that money is now genuinely moving into stock markets, not into fixed deposits, could that be a challenge for even SBI going forward?
Well, I think each of the segment of economy has got its own ability to absorb the money. So when you talk about the capital markets, see, the point is that whether the money which is going to the capital market, is it contributing to the froth or is it contributing to the capital formation? Froth can be created up to a level, not beyond that. So I would say that when it comes to the money which remains with the banking system or is lent, if at all it is lent for SME, for agriculture or for corporate, generally it goes for the capital formation. So I think if at all we have to sustain the growth of the economy, the capital formation perhaps cannot be ignored. Now the other question which you mentioned, you have in mind, is essentially relating to the liquidity and the related challenges. I would say that there are 2 or 3 major drivers as far as the liquidity are concerned. One among them is government is one of the major contributor in terms of the liquidity, the kind of spending which they do. We have seen that there was a point of time when the spending was hardly any, and which of course have shown up in terms of the fiscal numbers also. And also now the government finances, they are believing just in time kind of a funding, so it does not leave much of float in the system. Thus, the second source of liquidity could be RBI. Here also the focus is more in terms of managing inflation and ensuring that there is adequate liquidity in the system. Not excess, not short, adequate liquidity in the system. So I think these are the facts which we'll have to acknowledge. And I rather perceive it in the sense that when the economy moves from developing to the developed state, there cannot be an excess liquidity situation either. Whether the government contributes or the central bank contributes, there cannot be excess liquidity situation. So I think given that, it's a reality. So perhaps allocation of the liquidity between stock market, financial markets and the banking system will take its course. So that's how I look at it. But yes, of course, ability to source deposits across the geography by offering multiple products will perhaps be the differentiator.
Mr. Khara, I must compliment you for what you've done in terms of changing the entire culture at SBI, and especially in terms of one particular financial number which seems to be standing out is your ROA. I mean, who would have thought that State Bank of India would be anywhere close to 1%? It is now not the 1%. So on the ROA front, do you think large part of the heavy lifting is done? Can ROAs continue to move higher or they will stabilize now?
My effort is to continue to improve it.
Do you think you can go close to 2%?
At least in the near future, my target is to take it to 1.10. And of course, last quarter we were actually at 1.26, but for the year as a whole, we were at 1.04. So aim and ambition is to take it to 1.10, at least for a year. And of course, we'll keep on improving the numbers as we reach them.
Wow, fantastic. If you have to maintain this kind of growth, you've not raised enough tier 1 capital or capital from the equity market. At what point in next 12 to 18 months or after that, would you be coming to the market to raise pure equity capital?
Incidentally, I have not raised the capital, but in last 3 years' time, we have plowed back 1.10 trillion Indian rupees. And that is something which has led to the situation where our CET1 is perhaps the highest in 1 decade. So actually speaking, our ROE is much higher than our loan book growth. So that gives us the organic way of generating capital. So that is one of the reasons why we have not done it. But yes, of course, we are very mindful, and we believe that with we have got a loan book of about 37 trillion, and at this kind of a capital, we can easily support about 7 trillion worth of addition to the loan book, which actually turns out to be about 20% growth. So we are expecting about 15% growth, but we very closely we are evaluating the situation on ground, and as and when required, we can reach out the capital. Raising capital is not a challenge.
Do you look at your stock price? Do you check where the stock price of SBI has gone?
I do look at it. At the end of the day, I am supposed to get the numbers, where it was, how did it move. That is something which I do.
And when it hit a new high, how did you react?
Yeah, it gives me a lot of satisfaction because I in turn have created value for my stakeholders.
So what do you mind is the fair value of SBI?
Well, even now, I would say that it is being, considering the kind of a network which we have, considering the kind of quality of book which it is, and the way we are investing into technology, the way we are actually creating the muscles of the bank, I would say that it is still underrated.
Well, please make note of it. That's what I would say.
And I think they have started realizing, maybe in the course of time, the realization will be even more deeper also.
A lot of fund managers are here, they still buy private banks. So I bolta hu PSU bank lena chahiye unko. Mr. Khara, so the theme of today's evening is India 2030. As India's biggest banker, what are the 3 things which you think will change in next 4 to 5 years for SBI and for the Indian banking sector?
Well, I think some of the early signs we have already seen, the way the ecosystem has got evolved. That is something for the eventual good of the economy. I think we will continue to see an improvement over this, which may look to be incremental, but it will have substantial impact on the way we conduct our businesses. That is one very important thing which will be seen. Technology adoption and also the hyper-personalization is going to be a reality, and we are already working on it, and we will be in a position to showcase at least some shade of it in the days to come. Similarly, when it comes to our ability to reach out to all the segments of the customer base, that is something we have that reach, but we are sharpening our distribution capabilities. Of course, I would say that some of it is essentially to ensure that our levers function even more efficiently. That is the major focus which we have. In addition to that, we are now embarking upon the new initiative which is green. And internally we have adopted a resolution that as far as scope 1 and 2 are concerned, we should have significant achievement of scope 1 and 2 by the year 2030, and at least 7.5% of our total loan book should be green advances. That is what we are aiming for, and I'm sure that will actually project the bank and the economy in a very different light across the global scene.
Mr. Khara, if one looks at SBI subsidiaries, either you're number 1 or you are number 2. That's how all your subsidiaries are positioned. SBI Mutual Fund, number 1. SBI Cards, number 1. SBI Life Insurance, almost number 1. Do you think this leadership in your subsidiaries of financial services, are you likely to maintain that? And you think they can be significantly bigger than what they are?
I believe the children should follow what the parent has done. So that's why my expectation from each of them is that they should have at least 23% market share in their respective area.
How much of the profit for SBI consolidated basis is coming from subsidiaries, and in 3 years, how do you see that changing?
It's not much, considering the fact that the way this economy is, a significant proportion is in the banking sector. And though the profits, if at all we will look at it in terms of ROA or ROE, they are doing exceptionally well. But when it comes to absolute number, it's not really much. So of course, when we talk about our this year's profit, which was 61,077 crore, for the yearly profit for the bank only, the subsidiaries contribution was about 5,000 crore. So it is not much. But the more important part is that we are in a position to offer the product manufactured by our group companies to our customers. So what matters most is the quality. And quality of the product is something which will ensure that our relationship should be forever. And I always believe transaction does not lead to relationship. Relationships only generate transactions. So our ambition is to build up relationship in whichever segment we are, so that we should always have the transactions going to us.
Mr. Khara, I just saw you speaking to Mr. Prashant Kumar of Yes Bank, and as member of press, when SBI talks to Yes Bank, हम सोचने लग जाते हैं stake sale में कुछ हो रहा है क्या? कहाँ पर है Mr. Kumar? कुछ हो रहा है जी?
No, as far as Prashant is concerned, I only met him here, and we always maintain the arm's length distance with him.
But are you committed?
Yes, of course, we are invested into that, and I only look at the results at the quarterly interval, the way the other investors are looking at it.
So can I dismiss all this buzz which keeps on coming? हम नहीं करते हैं story. ET Now नहीं करता है. ET Now story नहीं करता Yes Bank की stake sale का.
Sorry?
ET Now story नहीं करता Yes Bank की stake sale का. But can we dismiss it जो दूसरे करते हैं?
No, I think why should I dismiss? Because I'm not even in the know what is happening.
Okay. Mr. Khara, so I'd like to draw everyone's attention to your other subsidiaries which are non-listed. One is SBI Mutual Fund or SBI, AMC. It is India's biggest. It's got a EM which has reached almost 10 lakh crore now. You wanted to take it public about 2.5 years ago, but that plan was put on a back burner because of market conditions. But looking at the size, the reach of SIP and the profitability, is there an inclination which is coming back to take SBI AMC public?
See, actually speaking, the reason for listing could be if at all the company needs capital. They have got a very strong net worth. And why should I unnecessarily expose them to QSQT? They should better focus on the returns which they should generate for their investors.
तो बच्चों को तो बड़ा होना पड़ता है ना सर?
नहीं, वो बड़े हो जाएंगे ना, अपने आप ही हो जाएंगे बाप.
What about UNO? If not 3 in 5 years, you think UNO will go public?
See, UNO is a very important distribution channel for us. So I think we probably cannot think of having a distribution channel being offered through a subsidiary. So I don't think so it's a doable proposition.
Mr. Khara, let's talk about categories. And one of the categories which is of mass interest is the HFC category. And we've seen not a brutal war, but we've seen a war within the public sector banks and the private sector banks when it comes to home loan growth. And SBI has got very aggressive rates there. Where is that end of your portfolio moving? Is that war in the HFC space over?
There is a war, but I'm not part of that. That is something which I can say. We are ensuring that what we are ensuring is a timely delivery. We are ensuring that the customers should get the loan, and also we offer the value add in terms of ensuring the clear visibility of the title, because this is something which is at times it is very opaque. And happy to share with you that we are almost at about 7.6 trillion loan book as far as mortgage loan is concerned, and we don't have LAP. It's pure play mortgage. And we are hoping that we will have a decent growth in this, and we don't see any challenge. When we look at our pipeline for the mortgage, there's no challenge across the country, and we have added to our capacity in terms of the CPCs which we have created. It has rather helped us in improving the turnaround time. So I don't see any challenge, because if at all we offer a quality product at a reasonable price, there is ample demand.
I'm going to keep SBI away from the equation, but if you really have to give us a sense of what is happening in the industry, especially in categories of unsecured loan, in the categories of gold loan, do you think there is a bit of froth building up there?
Well, yes, of course. See, what happened when it comes to unsecured loan, or for that matter, the gold loans also. See, actually, banking is a boring business. So one has to keep on doing the similar kind of thing again and again and again and again. So very often, some people try to resort to innovation. And those innovations were perhaps shortcuts. Shortcut does not work in banking. So ability to repay is absolutely essential. Underlying security, particularly when it comes to gold loan, is absolutely essential. So if at all somebody tries to work out an innovation which will probably have the shortcuts for this, that leads to challenges. And I think RBI could sense it in good time, and they took the necessary remedial steps. At least indicated to the industry, better take the remediations. Otherwise, there could be consequences which may not be in the interest of the financial sector.
I'll also like to draw your attention to what essentially is happening in terms of your global businesses. A lot of banks, in a sense, have consciously reduced the exposure to global businesses. SBI has also done that, but you have a formidable presence. Given that global economy is in a topsy-turvy mode, emerging markets are in a deep recession, how do you see that end of the market, that end of the business moving for SBI?
For us, it is, as of now, it is 12% of our business, of our balance sheet comes from our international operations. And we have an ambition of scaling it up only. Why? Because when India is becoming a global force to reckon, when India is becoming part of the global supply chain, it unfolds the opportunities. That is one. And secondly, we are, as far as our global operations are concerned, at times we are opportunistic also. Depending upon the geographies, depending upon the line of businesses, we are in a position to improve our NIMs in the international operation. And certainly it helps us in terms of our domestic business also, because when we are roping in the overseas investors, even that is something which we can do. So I think for us, we will continue to remain in the geographies where we are, and we are selectively looking at it, the other geographies also where we can expand, where there are opportunities where, so that is very clearly a focus area for us. And in the medium term, we will like to increase our international banking book from 12 to at least 15%.
A couple of last questions, just 2-3 questions. As a banker, sir, you're in a perfect position to perhaps tell the audience and the viewers that which are the 2 or 3 sectors you think they are on the cusp of strong growth. Last time, for example, I met you, you specifically said solar, renewable, manufacturing. So as a banker for next 3 to 5 years, where do you think demand at the corporate end is strong, and you're happy to lend looking at the dynamics of the sector?
No, I think I still maintain that renewable, solar in particular, will continue to be a very, very promising sunrise sector. And also the infrastructure, and which will lead to decent demand for the cement and steel. That will remain a very, very important sector for the economy in the days to come. And of course now, with the kind of focus which is there on manufacturing and becoming part of the global supply chain, even white goods and engineering goods are also assuming significance.
Last year, SBI's profit was higher than many of the IT and many of the FMCG companies put together. इस साल किसको beat करने वाले हो आप?
I don't plan for anything, so I only plan for actions. Outcome is the result of the actions.
Sir, with all due respect, no plans after August?
When the time will come, I'll unfold my plans also.
We coined a phrase in one of the interviews, and I said, who says elephants cannot dance? You said why SBI is not ready to get for a tango and a salsa. So what should shareholders expect now that you think the SBI is ready to do a tango and a salsa?
Yeah, I think we have got, our muscles are strong enough, we can do anything.
Guys, that's SBI chairman for you. I mean, it is absolutely incredible the way SBI has crafted its own course from complete stress in the COVID to the kind of recovery what they've done. The stock at an all-time high. Market cap is something which is a clear indication of how markets are now really endorsing what good work SBI are doing. So Mr. Khara, it's been an absolute pleasure personally for me to interact with you, see how you've navigated SBI and how you've navigated the banking sector in what could be called the extraordinary COVID times. Thank you very much, and thank you for joining us.
Thank you very much, Nikhil.
Thank you so much, gentlemen, for your invaluable experiences. And do remember to join us on social media. The hashtag is ETNow Leadership Dialogues.
And over to the next part. Thank you, gentlemen, for joining us. Mr. Khara, it's such a pleasure having you here at the ET Now Leadership Dialogues 2024. And now, moving on to decode for us what makes Indian stock markets unique and resilient, we have with us the authority, also known as the father of modern financial derivatives in India. We are here and very proud to have with us someone very special, as part of the National Stock Exchange, don't we?
Absolutely. Consider one of the most foremost experts, in fact, in financial market policies. I'm talking about none other than the Managing Director and CEO of the National Stock Exchange. Ladies and gentlemen, put your hands together for Mr. Ashish Kumar Chauhan. He will be in conversation with Senior Editor ET Now, Ajay Sharma. Over to you, gentlemen.
Thank you very much, Avan. Gentlemen, first of all, I'd like to thank all of you out here, not only for this evening, but also for the love and support and all the contribution you have in making our journey for the last 15 years. I know that in almost all of you here have been part of this journey for the last 15 years in some capacity or the other. So a great, a huge thanks from the entire team of ET Now for doing that. All right, so man in the hot seat now is Shri Ashish Chauhan, who's the MD and CEO of National Stock Exchange, a technology buff at heart, a very spiritual person as well. He's been guiding us in various capacities. So thank you very much for your support for the last 15 years. Today, of course, the topic of discussion is India 2030. I'll take a clock back. Everybody knows him from his, of course, his position at NSE, his days in BSE. But I'm sure not how many of you actually know that he was part of the core team at NSE when NSE was actually being founded. And when NSE was being founded, the market cap of India was 4 lakh crore. Now it's 450 lakh crore. So, sir, thank you very much for seeing all these, the developments which are happening in our market and the shape and size and form and technology, all of that. What are your observations of where we are heading in the next 6 to 8 years?
First, let me congratulate ET Now and the entire team for completing a glorious 15 years. It has been a good time for India last 15 years and probably best wishes for next 50. So then having said that, I think in last 30 years since NSE started operations in 1994, in debt market we started in somewhere around June. And in equities, we started in November 1994. So broadly, we are completing 30 years now of operations.
So we are almost at the same age in a way.
Yes. And so what we have seen is nobody had given India a chance then. And nobody had given, of course, NSE a chance. But both have kind of done so well that 4 lakh crore of market capitalization has now become 430 lakh crores, that is 4.3 crore, more than 110 times. And that's a pretty